All right, let's just dive right in with a pretty bold statement. We have hit a point of absolute peak madness when it comes to artificial intelligence.
Welcome to The Explainer. So the whole argument we're digging into today really hinges on this one idea. There's this massive, growing gap between what AI companies are promising and what they can actually deliver. The argument is, we're living inside an AI bubble, and it's being pumped full of air by promises that are still basically science fiction.
And yeah, that's the big question, isn't it? Our source poses this, and then it draws a really direct and maybe a little uncomfortable line to another moment of tech hype that a lot of us probably remember.
To really get a handle on the critique of today's AI hype, we've got to jump in the time machine and head back, because the whole vibe of this moment, that fear of missing out, the fire hose of money from investors, this belief that the old rules just don't apply anymore, it sounds an awful lot like the late 1990s.
I mean, who could forget Pets.com, right? The sock puppet. It was the absolute poster child for that whole get big fast mentality. They raised a ton of money, blew it all on Super Bowl ads, all while literally losing money on every bag of dog food they sold. For a while, the market loved it. But then, reality hit. The lesson was brutal. If you have revenue but no way to actually make a profit, it's all just noise.
And then you had Webvan. Oh man, Webvan. They raised almost $1 billion to build this incredible, futuristic system for grocery delivery. There was just one tiny problem. They built this massive thing for a market that didn't really exist yet. It's a textbook case of what happens when you scale up before you've proven anyone even wants what you're selling. Scale before sanity. It's a recipe for disaster.
And that right there, that quote, it just hits the nail on the head, doesn't it? It's that feeling, that really powerful collective belief that, but this time it's different. The old rules are out the window. Our source is basically screaming that these exact same patterns, the hype, the FOMO, the complete detachment from reality, they're all playing out again right now in AI.
Okay, so let's fast forward from history to today with a really specific case study. The source dives deep into a personal experience with a heavily marketed AI agent called GenSpark AI. And this is where the whole idea of a bubble stops being abstract and starts feeling very, very real.
And this is where things get wild. The gap between what was promised and what you actually got. The sales pitch was a game changer, an AI employee that doesn't just answer your questions, it actually does the work for you. But the real-life experience? It was the complete opposite. A system so broken that the user ended up having to work for it, just constantly trying to fix its mistakes.
The author says, this whole experience wasn't a lesson in productivity. Nope, it was a masterclass in managing tilt. It's that special kind of frustration you get. Any poker player will know this, when you're just stuck, playing a losing game against a system that feels totally broken. So here's what that tilt actually looked like in practice. It wasn't just a one-time thing, it was this constant, maddening, and expensive loop. You give it a super simple task, the agent trips at the starting line. It then burns through your expensive credits trying and failing to fix its own mess. And in the end, the task is still not done, and you have to just nuke the whole thing and start over.
And look, here's the kicker. This wasn't some super complex, high-level task it was failing at. The agent was failing at step 0, just getting permission to use a web browser. It's like hiring someone to do a job and they can't even figure out how to open the front door to the office. They're just stuck at the gate.
Okay, so this brings us to the part that really hurts, right? The actual cost. Because this isn't just about getting frustrated. We're talking about real money flying out the window for a promise that doesn't deliver.
First off, you've got the entry fee, an $800 a year subscription for this premium agent.
Then, on top of that, you're paying for the fuel, $40 a month for the credits it needs to even think.
And guess what? In the first 2 months, $60 of those credits, poof, gone in less than 2 days each time with absolutely zero to show for it.
And get this, a single 20-second phone call that didn't even work, that'll be $2, please, for absolutely nothing.
I love this metaphor the source uses, the guy with the funny hat. It perfectly describes this kind of marketing. That super happy, relentless, smiley face sales pitch that's basically designed to distract you from the fact that the product itself is, well, a total dud.
All right, let's pull the camera back a bit, because this one person's frustrating experience, well, the argument is that it's not just an isolated incident, it's a symptom of a much, much bigger problem happening across the entire AI industry.
And yeah, when you look at the numbers, you start to see that bigger picture. We're talking about a system where companies are just burning through insane amounts of cash. The source points to Sora, the video AI, supposedly spending hundreds of millions a month while making only a tiny fraction of that back. Or GenSpark AI, raising almost $500 million for a product that, well, in this one experience, delivered nothing.
So, what's the takeaway here? It's pretty clear, and honestly, a little sobering. The hype and the valuations have just completely disconnected from whether the products actually, work. We're looking at a whole system that feels like it's built more on promises than on actual performance.
So, if we really are in a bubble, the big question on everyone's mind is, what happens next? Well, according to this argument, a correction isn't just likely, it's inevitable, and maybe even necessary. And the prediction here is, well, it's pretty stark. The idea is that a big market downturn is going to come along and act like a cleansing. It'll wipe out all the players who are just running on hype. It's that same painful but ultimately necessary process that happened after the dot-com crash, the one that separates the real deal from the smoke and mirrors.
And that's what we're left with, right? This huge critical question. When all the hype dies down and the bubble finally pops, what's actually going to be left? And more importantly, how can we start to tell the difference right now between the stuff that's truly going to last and all the madness? That's the challenge.
This is the brief on the AI bubble. We've got a hard-hitting new analysis warning us that the current AI boom is basically an illusion built on broken tech and wild hype, and it's heading straight for a massive crash. Seriously, are we just worshiping projection over substance all over again? First, the AI space is totally mirroring the dot-com bubble's peak madness. Right now, the market is driven entirely by euphoria and narrative, definitely not reality or profit. Investors are paying massive premiums for companies selling the impossible. Are we just ignoring survival to celebrate fake growth, exactly like we did with Pets.com? Second, these heavily marketed AI products are failing spectacularly at basic tasks. Take GenSpark AI, for example. It's sold as this fully autonomous AI employee, charging you $420 to $800 a year, plus monthly credit fees. Yet, it completely fails to make a simple 20-second phone call or even just open a web browser, burning through your expensive credits for absolutely nothing. It's like paying top dollar for an elite assistant who can't even figure out how to open the office front gate. Finally, the underlying economics are completely unsustainable, guaranteeing a market correction. The industry's cash burn is staggering. To put it into perspective, the AI video generator Sora reportedly burns through $300 to $450 million a month, but only pulls in around $2.7 million in revenue. Honestly, how long can a business burn through literal swimming pools of cash before reality hits? The AI revolution might eventually arrive, but right now we're paying a massive premium for a digital fever dream that is about to face a brutal reality check.
So, I want you to think about this for a second. Have you ever experienced that very specific, almost primal urge to just rip your computer mouse right off your desk and launch at full speed against the drywall?
Oh, I mean, absolutely. It is such a distinctly modern flavor of rage, you know?
Right.
You're just sitting there staring at a screen, feeling profoundly betrayed by a machine that was, well, explicitly built to serve you.
Yeah, exactly. I mean, think about the last time you bought a piece of technology that promised to completely revolutionize your workflow. You know the drill.
Oh, yeah, you spend a massive premium on it.
Yes. You spend the premium, you block out a whole afternoon to set it up, and then you just sit there for like 3 hours watching a spinning loading wheel.
Mm-hmm.
Or you get this repetitive error message because the tool literally cannot perform its most basic function.
It's maddening. And, you know, in the poker world, there's actually a specialized term for the exact psychological state you enter when this happens.
Oh, right. Going on tilt.
Exactly, going on tilt. It's a brilliant framework for this kind of frustration.
How does it work in poker exactly? Like, what's the actual definition?
So if you sit down at a poker table, right, and you play the mathematical odds perfectly, you read the room, you make the smartest possible move, and you still lose a massive hand to just sheer blind variance.
Just bad luck.
Right, bad luck. The loss itself isn't what destroys you. It's your emotional reaction to the total unfairness of the loss.
Your judgment just completely clouds over.
Yeah, exactly. You start making these irrational, aggressive, really destructive bets just to claw your way back to a baseline of sanity.
Like you abandon your entire system because the universe feels broken.
Spot on. You just lose your grip on the strategy because you're so mad.
Well, today we are bringing you deep into that exact psychological state. but we're transposing it onto the absolute cutting edge of the tech world.
Yeah, this is going to be a fun one.
Our mission for this deep dive is to unpack this firsthand manifesto we found. It's equal parts fascinating and just deeply, deeply frustrated.
And our source today has an incredibly unusual background for this kind of tech critique.
He really does. He's a technical market trader, for one.
Right, and an early technology adopter plus a published Stoic philosopher.
Which is quite the resume. I mean, it means we're dealing with someone whose entire professional and philosophical existence is literally built around emotional regulation.
Yeah, calculated detachment is basically his whole brand.
And yet,
Yeah.
he has written this massive breakdown arguing that we are currently living inside an artificial intelligence bubble of, as he calls it, peak madness.
He's looking at this sheer, undeniable chasm between what AI marketing departments are promising you on these slick web pages and what actually happens when you sit down at your desk.
Right, when you actually try to make these insanely expensive digital tools do real work.
Exactly. And he firmly believes this current hype cycle perfectly mirrors the absolute worst, most degenerate excesses of the late 1990s .com era.
It's a heavy claim.
Yeah.
But before we dig into the actual mechanics of his argument, we really need to clarify our own parameters for this conversation.
Yes, that is a very important disclaimer to make right up front.
Because the author of our source material, he makes some very aggressive macroeconomic predictions here.
He definitely does. He theorizes about imminent market crashes, prolonged bear markets, and he offers some really sharp criticisms of global wealth distribution.
Right. And to be clear to you listening, we are not financial advisors. Our objective here isn't to, endorse his portfolio strategies or validate his political theories.
No, not at all. We are just impartially dissecting his core argument.
Which is that massive gap between the seductive narrative of AI and the super messy reality of actually executing it.
So let's start by looking at his methodology as a technical analyst, because I think it explains why his current alarm bells are ringing so loudly.
Yeah, break that down for us. What does a pure technical analyst actually do?
Well, in the trading world, a pure technical analyst does not care what a company actually does.
Wait, really? Not at all.
Not even a little bit. They don't read earnings reports. They don't care who the CEO is. They don't care what the new product launch looks like.
That seems so counterintuitive to how normal people invest.
It does. But they operate on this rigid philosophy that all human emotion, all news, and all fundamental value is already baked into the price of a stock.
Oh, I see. So they're just looking at the math of human behavior mapped onto a chart.
Exactly. They look at moving averages, those smooth out, volatile price data to reveal underlying trends.
Right.
And they look at support and resistance lines. Those are essentially psychological price barriers where crowds of buyers or sellers historically step in, usually out of fear or greed.
Okay, so it's pure chart math.
Pure math. Our source is rigid about this. He states explicitly that trading based on news or fundamentals like trading based on a story is a guaranteed way to lose your money.
But, and this is the fascinating part, he is deliberately breaking his own golden rule today.
He really is. He's stepping totally away from his charts.
Because he argues the market has reached a state of peak euphoria. He thinks the noise around AI is so deafening right now, and the narrative is so totally disconnected from underlying reality, that mathematical charts alone just cannot capture the sheer madness of the moment.
And you really have to factor in his philosophical background here, too.
Oh, absolutely. The Stoicism.
Yeah. I mean, this is a man who has written 5 books on Stoic philosophy.
And he translated them across French, English, and German, right?
Right, with titles like Stoic Samurai and The Way of the Stoic Diamond.
So a Stoic essentially practices the art of maintaining inner tranquility, regardless of whatever external chaos is happening.
Exactly. So if a Stoic Samurai technical trader is coming out and telling us that the current state of a technology is enough to drive him into pure table-flipping tilt,
We should probably look closely at what broke him.
I think we have to.
So, to set the stage for why he thinks we're in this massive bubble, he zooms way out to a macro worldview. He presents this historical constant regarding extreme wealth.
It's an interesting theory. He claims that from antiquity all the way through the Middle Ages, there were roughly 700 individuals at any given time who held the equivalent of billionaire status.
Right, about 700 people holding all that concentrated wealth.
And then he notes that today, globally, we still have roughly that exact same cohort size of ultra-wealthy individuals at the very top.
The only difference, he argues, is that today's elite are no longer content with being billionaires. The new goalpost is to become a trillionaire.
Right. And his economic theory kind of relies on the idea that generating and concentrating that level of unprecedented wealth requires a system that inherently extracts value from the vast majority of people.
So he views this extreme concentration of capital as fundamentally unstable,
Very unstable. Because of this, he predicts a brutal bear market is coming.
like a prolonged period of falling asset prices.
Exactly. He sees it as a necessary cleansing mechanism to purge the system of all this unbacked hype and basically return it to a rational baseline.
I mean, I find that historical comparison really striking, but I feel like we need to poke at it a little bit.
Oh, definitely.
Is it truly a one-to-one comparison? Because the localized wealth of antiquity, say a Roman emperor who hoarded physical gold, grain, and land, that operates on a very different physical constraint than the wealth of modern tech billionaires.
That is a crucial distinction.
Right, because today's wealth is largely digitized, it's highly leveraged, and it's built on a globalized fiat currency system. A modern tech billionaire's net worth is mostly speculative stock value based on future expectations.
It's not just physical bullion sitting in a vault somewhere.
Exactly.
No, from a pure macroeconomic perspective, comparing a medieval king's physical assets to a modern CEO's stock options kind of ignores the mechanics of modern leverage and fiat money.
Because the ancients couldn't just print currency to inflate asset prices the way modern central banks do.
Exactly. However, considering his stoic background, I tend to read his 700 billionaires metric more as like a philosophical anchor rather than a strict economic formula.
Oh, like he's highlighting the psychological constant of human greed.
Yes. The actual mechanisms of wealth have evolved from physical land to digital network effects, sure. But the appetite for infinite accumulation remains identical.
Okay, that makes sense.
He's essentially arguing that building an economic ecosystem around that infinite appetite eventually causes the whole structure to buckle under its own weight.
Got it. And to understand why he is so convinced that current AI development is merely a vehicle for this kind of unsustainable wealth extraction, we have to look back.
We have to look at the last time the tech industry built an entire narrative totally divorced from reality.
Right. We need to examine the late 1990s dot-com bubble.
The dot-com era is basically the ultimate modern cautionary tale. It shows exactly what happens when cheap capital meets a brand new technological paradigm.
Because people realized the internet was going to change the world, which was completely true.
It was true. The internet did change everything, but investors assumed that literally any company with a website would somehow capture that value.
Which was disastrously false.
Very false.
Our source actually uses an AI, specifically ChatGPT, to analyze this era for his manifesto. He asks it to pull the most egregious examples of what he calls peak degeneracy.
And the AI summarizes the period perfectly. It calls it a fever dream where discipline was abandoned and illusion was crowned as truth.
That is surprisingly poetic for ChatGPT.
It really is. Rather than just listing out the companies he mentions, let's really look at the market psychology behind them. The classic poster child he points to is Pets.com.
Oh, Pets.com. The famous sock puppet.
Yes, the sock puppet. Pets.com perfectly illustrates the danger of prioritizing pure growth over actual unit economics.
They have this massive marketing budget.
Huge. They went public and raised unbelievable amounts of capital, but their core business model was selling heavy bags of dog food and cat litter over the internet.
And offering free or heavily subsidized shipping just to acquire those customers.
Right, which makes no mathematical sense.
No. If you are selling a 40-pound bag of dog food at a competitive retail price, the physical cost of putting that incredibly heavy item in a cardboard box and shipping it across the country completely obliterates any potential profit margin.
They were literally losing money on almost every single transaction.
But the market just didn't care about the margins at the time, did they?
Not even a little. The market only cared about user acquisition and website traffic. Pets.com famously spent millions on a Super Bowl commercial while they were bleeding cash on their basic operations.
Wow. Millions on an ad while losing money on every bag of food.
Yeah. The core lesson our source extracts here is that revenue without profit is just noise. If you are subsidizing your product with venture capital just to show user growth, eventually the music stops.
And when did the music stop for them?
Pets.com collapsed entirely within 9 months of their IPO.
9 months. That is incredibly fast. Then you have Webvan, which our source points to as a story about the absolute arrogance of infrastructure.
Webvan is a wild story. They raised over $800 million to build highly complex, automated grocery warehouses all across the United States. They just assumed that if they built the ultimate delivery infrastructure, consumer habits would instantly shift to support it.
And ironically, companies like Amazon and major grocery chains operate highly successful versions of this exact model today.
Yes, exactly. The idea wasn't inherently flawed at all, but their timing and their execution were entirely detached from the reality of consumer behavior in 1999.
Because you cannot force millions of people to change how they buy groceries literally overnight, just because you poured a bunch of concrete and bought a fleet of delivery trucks.
Right. They scaled their expenses to a massive national level before they had even proven the model could work profitably in a single city.
That's insane.
They burned through hundreds of millions of dollars and went bankrupt by 2001.
Which brings us to another prime example of this mass delusion, e-toys.
Oh, e-toys. This one is crazy. E-toys achieved a market capitalization, which is the total value of all its outstanding stock that was higher than Toys R Us.
I mean, think about the absurdity of that from a grounded perspective for a second.
It's hard to even wrap your head around.
Toys R Us had thousands of physical retail stores. They had established global supply chains, massive brand recognition, and billions in actual tangible revenue.
And what did e-toys have?
They had a fraction of the revenue and almost zero track record. But investors were pricing e-toys based on the absolute certainty of future e-commerce dominance.
While simultaneously pricing Toys R Us as if it were a relic of the past.
Exactly. The market was completely intoxicated by the narrative of the internet. They were mistaking the mere potential of a new platform for actual realized achievement.
And this intoxication, it spread really heavily to retail investors too, the everyday people playing the stock market from their home computers.
Right. Our source highlights theglobe.com, an early social media platform.
Yeah, when they went public, their stock surged over 600% in a single trading day.
600%.
In one day. There was zero rational financial modeling behind that surge. It was purely retail speculation. Literally, if a company had .com in its name, people threw their retirement savings at it.
The tragic part is that early insiders often cashed out at the peak, leaving everyday investors holding worthless stock when gravity finally reasserted itself.
Which leads us to the most structurally dangerous example he provides in his manifesto, Global Crossing.
Okay, Global Crossing. Because this wasn't just a silly website with a mascot, right?
No, this was infrastructure. They were building global fiber optic networks. They were laying the actual physical cables under the ocean that the internet needed to function.
And to fund all this massive underwater construction, they took on staggering amounts of debt.
Astronomical debt. But the demand for internet bandwidth didn't explode quite as fast as they projected.
So they had all this cable and no one using it.
Exactly. So they had to hide their terrible financials from Wall Street. And they did this using an accounting mechanism called capacity swaps.
We should really break down how this accounting trick works, because I feel like it perfectly highlights how companies engineer the illusion of success.
Let's do it. So a capacity swap is essentially a financial shell game. Imagine two telecommunications companies. Company A and Company B.
Okay, got it. Company A and Company B.
They both laid thousands of miles of fiber optic cable, and they both have a ton of unused empty capacity on those expensive networks.
Because the internet traffic isn't there yet.
Right. But Wall Street is demanding to see revenue growth. So Company A agrees to lease space on Company B's network for $100 million.
Okay.
Simultaneously, Company B agrees to lease space on Company A's network for $100 million.
Wait, so they just buy space from each other. Does actual money even change hands?
No actual money needs to change hands, or they just literally wire the exact same amount of money back and forth.
But on their quarterly earnings reports.
Both companies suddenly claim $100 million in brand new revenue.
That is wild. They artificially inflate their top-line numbers without generating any actual economic value from a real paying customer.
Precisely. It was pure financial engineering, designed only to mask the reality that their core business wasn't generating enough cash to service their massive debt.
And what happened when the market figured it out?
When Wall Street finally looked past the accounting tricks, the whole house of cards collapsed, and Global Crossing filed for a massive bankruptcy.
So when you look at the connective tissue between all these companies, DashPets.com, Webvan, eToys, The Globe, and Global Crossing, the overarching theme our source identifies is profound.
Narrative replaced reality, growth replaced profit, and cheap liquidity hid systemic incompetence.
And that specific cocktail of delusion frequently leads investors to utter the most dangerous phrase in the history of finance.
This time is different.
Exactly.
Oh.
I kind of think about it like a group of investors funding an incredibly expensive state-of-the-art airport terminal.
Oh, that's a great analogy.
Right. Like they build these gorgeous marble floors, high-tech security gates, massive baggage carousels.
Yeah.
But they entirely forgot to check if anyone had actually invented the airplane yet.
Yes.
They are completely pricing in the future dominance of global air travel and celebrating the architecture of their gorgeous terminal, while ignoring the present reality that they have absolutely no way to fly.
That captures the structural flaw so perfectly. You are building expensive infrastructure for a paradigm that hasn't even arrived, funded by people who are convinced that merely possessing an airport somehow guarantees the invention of the plane.
And when the venture capital runs out before the Wright brothers even show up, the terminal just becomes a ghost town.
And our source is using this extensive historical detour as a giant mirror. He argues forcefully that the modern tech industry has simply traded the .com suffix for .ai.
He believes the narrative has once again entirely eclipsed reality.
And he points to the current marketing of what they call AI agents as the ultimate proof of this modern delusion.
Which brings us to the specific software that triggered our Stoic author's descent to full poker tilt, a platform called GenSpark AI, and their flagship product, the Flow Super Agent Claw.
We really need to dissect the seductive marketing of what they call full agentic capabilities.
Yeah, let's get into that. Because the source talks about watching these tech executives in presentation videos, making these outrageous promises with big smiles on their faces, sometimes wearing funny hats.
Right. They aren't just selling a helpful little tool. They are out there promising software that will make you 1,000 times more productive.
1,000 times.
And the term agent is a massive, massive pivot in how the software industry is trying to sell artificial intelligence right now.
How so? Like, how is an agent different from what we already use?
Well, up to this point, we have primarily interacted with large language models. Think of standard ChatGPT. That is a tool. It is passive.
Like a hammer.
Exactly. If you have a hammer, the hammer just sits on the desk until you pick it up, decide where the nail is, and swing it.
If you use an LLM, you have to write a prompt, evaluate the text it gives you, and figure out what to do with it. You're still the manager doing the cognitive heavy lifting.
Right. You direct the workflow. But GenSpark is pitching the Flow Super Agent Claw as a fully autonomous digital worker.
The digital worker.
Yes. It is attempting to position itself as a no-code operating system meant to entirely replace your administrative labor.
Okay, so in their sales pitch, the fundamental interaction changes completely. You no longer give the software an instruction, you give it an intent.
That's the key word, intent. You don't say, hey, open this specific spreadsheet, copy column B, and paste it into an email to Sarah.
You just say, handle my weekly sales reporting.
Exactly. A promise is that the agent understands the context of your job well enough to independently log into your database, pull the correct numbers, format them, draft the email, and send it.
All without you micromanaging the intermediate steps. They're literally selling you a digital subordinate.
And the infrastructure required to maintain this illusion of a persistent, always-on employee is significant.
They emphasize that your agent lives in a dedicated, continuous cloud environment, right?
Yes. It isn't just a program that spins up when you open an app on your laptop and closes when you shut it down.
It is positioned as an independent entity that is theoretically processing your data and managing your workflows even while you are fast asleep.
And hiring this so-called digital worker requires a very serious financial commitment.
Our source notes that just gaining access to this cloud environment costs a user between $420 and $800 a year.
Just for the base subscription.
Right. And that is before you start paying for the internal credits required to actually execute the tasks.
The ambition of this marketing is really breathtaking when you step back. To function as an autonomous worker, the software demands deep, deep integration into your most sensitive, critical daily systems.
It wants authorization to read your Gmail. It wants to manage your Google Drive. It wants to monitor your Slack channels. And it wants full control of your calendar.
Now, if you pause and really think about it, if a piece of software could genuinely do all of that reliably, with zero supervision,
it would represent the largest economic shift since the assembly line. It would be the wholesale automation of white-collar knowledge work.
which completely explains why the psychological hook is so incredibly deep here.
Because modern knowledge workers are just drowning in administrative friction.
Drowning. Everyone has parts of their job that slowly drain their will to live.
The endless Slack notifications. The scheduling Tetris of just trying to find a 30-minute window for a meeting where everyone is free. The mindless data entry, transferring information from one app to another app.
Exactly. And then GenSpark arrives and says, hey, we have a magic bullet that will eliminate the absolute worst parts of your professional life.
And when you are drowning in burnout and someone throws you a life preserver, you really don't stop to ask if it's made of solid foam or if it's just painted cardboard.
You just grab it.
The promise of relief is so overwhelming that you willingly suspend your critical judgment. We want the narrative to be true so badly that we completely ignore the technical realities of what the software can actually accomplish.
But as our stoic trader discovers very quickly, the gravity of technical reality always reasserts itself.
Always.
While the marketing promises an elite, tireless army of digital workers, we have to look at what actually happens when he opens his wallet, grants the permissions, and tries to make this software perform a very mundane, repetitive task.
This is where the narrative completely collapses into a spectacular comedy of digital errors.
It really is funny in a dark way. To understand the depth of his frustration, you have to look at his specific use case.
Okay, play it out.
So he is a prolific content creator. He has manually uploaded 4,800 YouTube videos over his career.
4,800. That means he has manually gone through the exact same sequence of uploading, tagging, and publishing a video nearly 5,000 times.
It is the absolute definition of repetitive cognitive labor.
And YouTube, like any platform, requires you to fill out specific metadata forms when you upload a video.
Right. You have to input tags, descriptions, check category boxes, and keep in mind, he doesn't want the AI to write a script for him or edit his video or generate a custom thumbnail.
He's already done the difficult creative work himself.
Exactly. He just wants his expensive $800 a year digital assistant to handle the final mechanical step of publishing.
He gives the agent a remarkably simple brief. He has a set of 27 text tags prepared in one web browser, which he calls his Helium browser.
Right.
He wants the AI to go to that browser, copy the 27 tags, switch over to Microsoft Edge, where his YouTube studio is already open, paste the tags into the correct input box, and click the publish button.
Copy, switch, paste, click.
In the physical world, this is the equivalent of asking a human assistant to pick up a piece of paper from your desk, walk 3 feet to a filing cabinet, place the paper inside, and close the drawer.
It requires absolute zero creative thought.
So you initiate the intent on the dashboard. What actually happens when the Flow super agent claw attempts to move these 27 tags?
It results in a complete and total systemic failure.
Total failure.
And the nature of the failure is what makes it so revealing about the limitations of current AI technology.
Because it doesn't fail. Because it pasted the text in the wrong font. Or because it clicked the wrong button on the YouTube page.
No, it fails to even enter the workspace.
It trips over the entrance gate.
Exactly. For a cloud-based AI to operate across different applications on your local computer, it requires complex permissions.
There are security protocols.
It needs the operating system to grant it the digital keys to interact with Microsoft Edge. So the user triggers the workflow, and the AI needs a security pop-up authorization to appear so it can click allow and actually access the browser.
Okay.
The AI manages to get authorization for the first browser, but it entirely fails to trigger the pop-up for Microsoft Edge.
It just stalls out.
It just stalls. It cannot get past the initial security handshake to even look at the YouTube page.
Now, if this were standard, traditional software, it would just flash an error message saying, cannot access Microsoft Edge, and the process would just end.
But because this is marketed as an agent with intent,
Oh, no.
it is programmed to try and solve its own problems. And this is where the economic reality of the internal credit system turns a simple glitch into a total financial hemorrhage.
Right, because the agent encounters the locked door and it starts thinking.
It begins trying different technical pathways. It attempts to open different virtual desktops, or it searches for alternative ways to trigger the permission prompt.
And because you are renting time on their massive cloud servers, every single time the agent tries a new pathway and fails, it deducts credits from your account.
Yes. Our source reports that the system charged him $10 in credits just to think about its own failure to open a web browser.
$10.
Imagine hiring a human assistant and they fail to open the front door to your office. And instead of stopping and asking for help, they just stand on the welcome mat for 3 hours, charging you their hourly rate to philosophize about the structural integrity of doorknobs.
That is the perfect analogy. And here is the truly agonizing part of the software architecture. The AI has memory.
which is sold as a premium feature, by the way. A digital worker obviously needs memory to understand the context of your ongoing projects.
But in this scenario, that memory becomes a catastrophic bug.
Exactly. In the architecture of an AI model, memory is handled through what's called a context window.
Right.
As the AI tries to solve the browser issue and fails, the record of that failure is added to its context window. So the prompt it is constantly processing gets longer and more convoluted with every single failed attempt.
Because it remembers that it failed. So it tries increasingly complex, bizarre methods to bypass the failure.
Getting further and further away from the original goal of just copying the YouTube tags.
It gets trapped in a massive feedback loop of expensive overthinking. It's like a robotic vacuum cleaner getting wedged under a sofa, but every time it bumps the leg of the couch, it actively deducts money from your checking account.
And to compound the misery, the user interface for this $800 a year operating system lacks the most fundamental safety features.
What do you mean?
When the user sees his credits literally evaporating as the AI bangs its head against the digital wall, he frantically tries to stop it.
But he realizes he can't just hit a stop button.
There is no turn-off switch. There is no simple manual override to say, stop processing, you are wasting my money.
That feels like a massive oversight.
Furthermore, because the AI's memory is now polluted by this massive failure loop, the user cannot simply refresh the page and try the task again from scratch.
Oh, because it remembers.
Yes. The moment he reinitiates the workflow, the AI remembers its previous frustration and instantly resumes burning credits to solve a problem that structurally cannot be solved.
So what is the technical solution? How does a stoic trader actually stop a cloud-based agent from draining his wallet in real time?
He has to deploy the nuclear option.
Which is?
The only way he can wipe the AI's context window clean and completely sever the billing cycle is to completely uninstall the entire virtual machine environment from his computer.
And reinstall it from scratch.
Yes.
That is deeply unhinged.
He details the installation process, and it is agonizing. The progress bar stalls out at 90%.
Of course it does.
It sits there for 5 minutes, making him wonder if the whole operating system has crashed before finally completing. Then he has to manually relink all his accounts and reestablish his user preferences.
He is spending hours performing highly technical, deeply frustrating manual labor just to reset a tool that he purchased explicitly to save him from manual labor.
It loops directly back to his thesis about the dot-com era. The marketing sells you this frictionless, automated future.
But the reality is that the friction hasn't been eliminated at all. It has merely been relocated and then monetized.
Exactly. Instead of spending 5 minutes manually copying and pasting his 27 YouTube tags, which, by the way, costs him nothing but a few minutes of time,
Right.
he is spending 3 hours managing the psychological breakdown of a digital entity that charges him a premium for the privilege of failing.
And he emphasizes that this wasn't an isolated weird bug just with Microsoft Edge.
No, he tried giving the agent other, much simpler desktop tasks. He asked it to just rename some files in a blank folder.
Okay, rename files. Simple.
When he looked at the credit pricing structure for that specific action, he realized that even in the absolute best case scenario,
Like a miracle scenario where the agent encounters no permission errors and works perfectly on the first try.
exactly, it would still cost him $3 in credits just to rename 10 files.
Let's really sit with that math for a second. $3 to rename 10 files.
And that assumes perfect execution. If it gets stuck at another permission gate, that $3 task easily balloons into a $30 failure loop.
He rightfully points out that there is absolutely no individual or business on Earth that is going to spend $30 to rename 10 files when a human intern can do it for free in 45 seconds.
The fundamental unit economics of the microtransactions required to run these autonomous agents make them completely non-viable for the mundane administrative tasks they are aggressively advertised to perform.
Okay, so if this heavily funded AI struggles this profoundly to navigate the confined, highly structured digital environment of a desktop computer browser,
Yeah.
you have to wonder how it fares when it is sent out into the wild.
Oh, the real world.
Right, because they don't just promise to organize your files. The marketing explicitly promises that these agents can interact with the messy, unpredictable real world on your behalf.
They do. They heavily market the capability for the agent to make actual live phone calls to human beings to handle your scheduling and logistics.
Which brings us to the incredible story of the $2 phone call. This is arguably the most illustrative anecdote in his entire manifesto about the massive gap between artificial intelligence and actual human intuition.
The author decides he is going to test this real-world interaction. He wants the AI to make a simple outbound call to schedule an appointment.
And having just survived the YouTube tag disaster, he knows exactly how fragile these systems are.
Right, so he doesn't just give a vague intent this time. He gives the AI incredibly strict, explicit instructions for the phone call.
Because he understands the social dynamics of the real world. He knows perfectly well that if an average human receptionist answers the phone and hears a synthetic voice talking about agentic workflows,
They're instantly going to assume it is a telemarketing scam or a phishing attempt and just hang up the phone.
right, the average person has no context for an AI assistant calling them. We're deeply conditioned to reject automated voices.
Precisely. So the author explicitly commands the AI in his text prompt. He types, "Do not mention AI, do not say you are an agent, just act human. Use very short sentences, mostly just say yes or no. Schedule the meeting."
It is a very clear directive instructing the machine to prioritize reducing social friction over total transparency.
So the highly advanced, intent-driven digital worker dials the number.
What happens when the human actually answers?
It immediately and spectacularly disobeys every single instruction in the prompt.
Of course.
The human says hello, and the AI instantly launches into a complex, highly formal, deeply robotic monologue. It says, "Hello, I am Lei, an artificial intelligence, and I'm calling you on behalf of," and then it formally states the author's full name.
It led with the exact phrase he specifically ordered it not to use.
It did. And the human on the other end, understandably confused and completely taken aback by this bizarre, stilted greeting, just says, "Hello."
Which is a completely normal human reaction to an awkward phone connection. You say hello again to try and establish a normal conversational cadence. You're prompting the caller to speak normally.
But the AI does not possess conversational intuition. It doesn't understand social cues or human cadence. It only understands its programmed script and its audio processing loop.
So what does it do?
Because the human spoke over it, the AI perceives an interruption. So it resets. It repeats the exact same robotic introduction from the top. "Hello, I am Le, an artificial intelligence."
Gets trapped in another loop.
The human says hello again, now growing actively frustrated. The AI resets and repeats the entire monologue a third time.
Oh my God.
At which point, the human simply hangs up the phone.
Of course they hung up. The entire interaction was incredibly weird and off-putting. How long did this absolute masterclass in communication take?
The entire call lasted exactly 20 seconds.
And what was the financial damage to our stoic author?
He was charged $2 in credits.
$2.
$2 for the AI to actively annoy a human being and completely fail to schedule the appointment.
$2 for 20 seconds of pure social awkwardness. That is an extortionate burn rate for utter failure.
He points out the terrifying financial math of this specific feature. If the human had been more patient and actually stayed on the line, and the AI had bumbled its way through a 3-minute conversation trying to explain its own existence,
That single failed phone call could have easily cost him $20.
he stresses that the failure rate for this kind of cold calling by an AI is likely massive. It is essentially a parlor trick. It's a gimmick that is entirely disconnected from the nuanced reality of human social interaction, yet it is monetized at a premium enterprise rate.
I do want to interject and look at the mechanics of this from the developer side, though, because it's interesting.
Okay, sure.
The user is furious that the AI ignored his direct command to lie about its identity. He wanted it to pretend to be human to smooth over the interaction.
Right.
But I'd actually argue that an AI aggressively refusing to conceal its non-human nature isn't really a failure to understand the prompt. It's almost certainly a hard-coded safety guardrail built by the engineering team.
Oh, that's an interesting point.
Think about it. In an era where deepfakes and AI voice cloning are constantly being used to scam people out of their life savings, tech companies are utterly terrified of liability.
Right. They don't want to be sued because their AI impersonated a human to steal a bank account.
Exactly. It seems highly likely that the underlying model has a foundational directive that completely overrides any user prompts. Basically, you must always identify yourself as an AI.
Let's dig into the mechanics of that, because while your logic holds up perfectly regarding corporate liability, it completely breaks the functionality of the product they're actually selling.
How so?
Yes, the engineers likely hard-coded an identity disclosure to prevent fraud, but the problem is that they deployed that rigid engineering constraint into a product heavily marketed as a seamless, human-replacing assistant.
Ah,
The real world requires nuance, social lubrication, and sometimes, frankly, little white lies. When a human assistant answers a phone and says, "Mr. Smith is in a meeting," when Mr. Smith is actually taking a nap in his office.
that isn't malicious fraud. That is just standard social lubrication.
Exactly. The AI is either structurally incapable of that nuance, or it is explicitly blocked from using it by its own safety parameters. In either case, from the user's perspective, they are paying premium rates for a tool that simply cannot perform the basic function it was hired for.
That makes total sense. The reason why it fails doesn't really matter to the user's wallet.
Right. The failure itself is what generates the tilt.
That's entirely fair. The immense friction between the corporate safety parameters and the marketing promises renders the tool practically useless for real-world tasks.
And this wasn't even the only time he tried to connect the AI to the outside world. He had another workflow he wanted to automate.
What was this one?
He didn't want it scheduling meetings, he just wanted it to read his text messages.
Which seems like a much safer, completely read-only task.
He states in his manifesto, "I never want to read a WhatsApp message again."
Honestly, highly relatable.
He just wanted the GenSpark AI to silently connect to his WhatsApp account, scan his messages once a week, and generate a brief summary document.
Which sounds incredibly useful. That is exactly the kind of administrative weight you actively want to offload.
But connecting a third-party AI to a secure messaging app isn't as simple as just giving it your password, is it?
No, not at all. It requires navigating the really complex world of APIs.
Let's explain APIs quickly. Think of an API, an application programming interface, like a digital menu at a restaurant.
I love this analogy.
A software program can't just walk into another program's kitchen and start grabbing ingredients out of the fridge.
Right. It has to look at the menu, submit a highly specific, properly formatted request to the waiter, which is the API, and the waiter brings back the requested data.
And to make this request, you need API keys, which are essentially secure digital handshakes that prove you have the proper authorization to ask for that specific data.
The major problem here is that massive platforms like Meta, who owns WhatsApp, are deeply, deeply hostile to unauthorized third-party bots rummaging through their data ecosystems.
Very hostile. They build massive security walls to keep external programs out, both to protect user privacy and to prevent automated spam networks.
They actively rate limit and block any unnatural traffic.
So the author couldn't just plug GenSpark directly into WhatsApp. He had to use a third-party bridge service called Beeper to try and facilitate the connection.
Oh boy, adding a middleman.
He spent hours navigating a highly technical, really frustrating setup process just to generate and link these API keys across different platforms to build a backdoor bridge for the AI.
And it is crucial to remember that while he is spending his entire afternoon doing this frustrating manual setup, the AI's cloud environment is still active, and the credit meter is still running.
The meter is running fast. He finally gets the complex connection established. The digital handshake actually happens for about 1 second. Almost instantly, Meta's security architecture detects the unnatural machine speed pinging behavior and completely revokes the API keys.
The bridge is intentionally collapsed by the host platform.
The door is slammed shut.
But let me guess.
Yeah.
The AI doesn't know the door is permanently locked.
It only knows it has an incomplete task, so it just keeps trying to ping the broken connection. It keeps submitting requests to an API that refuses to answer.
And what does the author do?
The author, totally exhausted by the setup process, leaves the program running, just hoping the connection might eventually resolve itself. He walks away and comes back 2 days later.
And what does his dashboard look like when he logs back in?
In less than 48 hours, the AI has burned through his entire monthly allocation of 21,000 credits.
21,000 credits. Translated into actual currency, how much money is that?
$40. Vaporized in 2 days.
And did he get his summary?
The AI hasn't summarized a single WhatsApp message. It just spent $40 continuously knocking on a locked digital door.
Wow.
He writes that he actually tried this exact process multiple times over consecutive months, hoping software updates would fix it. Every single time, the result was completely identical. The API connection breaks, the AI enters a failure loop, and the money evaporates.
So if we step back and look at his total experience, we have an AI that fails to navigate a basic desktop browser. It fails to navigate standard human phone etiquette, and it fails to maintain basic API integrations.
Right.
And in every single scenario, the failure is monetized by the minute. Which really brings us to the macroeconomic level of his entire argument.
Yes, we need to zoom out now.
We need to connect these localized, micro-level burn rates, losing $10 on a failed click, $2 on a failed phone call, $40 on a broken API.
We need to connect that to the massive macro-level cash inferno that is happening behind the scenes of the companies actually building these models.
Because the money being burned by the frustrated user is a microscopic fraction of the money being burned by the creators of the AI.
We have to look at the brutal unit economics of the current bubble.
The source notes that GenSpark AI has secured $435 million in venture capital funding.
Now, to a normal person outside of Silicon Valley, $435 million sounds like an infinite runway.
It sounds like a total guarantee that the company will succeed, hire the best engineers, and eventually fix all these bugs.
It sounds like an empire. But in the current landscape of generative AI, the source correctly points out that $435 million is essentially just a down payment.
Why is it so incredibly expensive?
The computational infrastructure required to train and run these massive language models is staggeringly expensive.
Yeah.
You aren't just paying for smart software engineers, you are paying for vast data centers filled with highly specialized hardware.
Specifically, NVIDIA GPUs.
Yes.
And we should probably briefly touch on why AI relies on GPUs rather than standard computer processors, because I think it explains the massive bottleneck in the whole industry.
Good point. So standard CPUs, the chips in a normal laptop, are really great at doing complex sequential tasks very quickly.
Right.
Think of a CPU like a single brilliant math professor who can solve a very difficult equation step by step.
Okay.
But training a neural network doesn't require complex sequential logic. It requires doing millions of very basic arithmetic calculations, specifically matrix multiplications, simultaneously.
At the exact same time.
Right. A GPU is like having 10,000 middle schoolers who can only do basic addition, but they can all do it at the exact same time. AI requires massive parallel processing, which means it requires thousands and thousands of GPUs.
And NVIDIA practically holds a monopoly on the absolute best enterprise GPUs, allowing them to charge astronomical premiums.
So buying the physical hardware drains the funding instantly. And then you have to actually power them.
Oh, the energy costs.
These data centers consume enormous city-level amounts of electricity and require massive cooling systems running 24/7 so they don't melt down.
To put the operational costs in perspective, the source uses another major AI product as a benchmark here. He looks at OpenAI, specifically their video generation model, Sora.
Sora is an excellent benchmark for understanding peak compute costs because generating high-definition video requires exponentially more processing power than generating text.
So what are the numbers?
The source site's industry estimates alleging that Sora costs between $300 to $450 million per month just to operate.
Per month. Let that really sink in. So GenSpark's entire, seemingly massive war chest of $435 million would keep a flagship model like Sora running for roughly 4 weeks.
Exactly. Just 4 weeks, and the money is gone. And the revenue side of the equation is what makes it a massive bubble.
Right, because if they're spending $450 million, they must be making more than that, right?
While Sora is allegedly burning up to $450 million a month in computational costs, the source claims it was only generating about $2.7 million a month in actual revenue.
That isn't a viable business model. That is a financial black hole funded entirely by speculative venture capital.
It is the ultimate resurrection of the dot-com era philosophy. Prioritize the narrative and user acquisition over profit and sustainability.
They are heavily subsidizing the actual cost of running the AI to build hype, hoping that eventually hardware will become cheap enough.
Or the models will become indispensable enough that they can finally raise prices and turn a profit.
But right now, the gap between the raw cost of the compute power and the economic value the service actually delivers to a user is astronomical.
Which leads to our stoic trader's grim, highly mathematical prediction for the future of GenSpark specifically.
How does he assess their survival odds?
He assesses them with the cold, hard detachment of a technical analyst. He gives them a 95% chance of completely disappearing. 95%. He predicts they will burn through their funding, fail to achieve profitability, go bankrupt, and simply shut down the servers, vaporizing the entire $435 million investment.
And what does he think happens in the other 5% of scenarios? What's the success case?
The only hope, the 5% chance of survival, is an acquisition. They get bought out by a tech behemoth with endlessly deep pockets. Think Google or Microsoft, or an Elon Musk venture.
Someone who could just casually absorb hundreds of millions in operating losses simply to acquire GenSpark's engineering talent or a specific piece of their proprietary workload technology.
But as he points out with brutal honesty, why would Google buy them? He literally writes in the manifesto, this is not even a better product.
Right. Why would a tech giant spend billions to acquire a company that hasn't even figured out how to build a reliable grant access protocol or a functional turnoff switch?
It is a highly rational question. If your core product routinely traps users in expensive failure loops, you aren't building a revolution, you are building a massive liability.
Faced with this stark reality, the author actually tries to adapt his own behavior. He doesn't just complain and walk away. He actively tries to mitigate his personal financial bleeding.
He realizes that the default Flow superagent claw brain is simply too expensive and too fragile to use for everyday tasks.
But he notices a setting in the interface.
Right. He can switch the underlying architecture of the AI to a cheaper, lighter model.
So he downgrades his digital worker to a model called Minimax 2.5.
Minimax 2.5.
I'm sorry, it just sounds like a discount brand of battery you buy at a gas station.
It is what the industry calls a small language model, or SLM. It has far fewer parameters and isn't nearly as smart as the massive frontier models.
But crucially, it requires vastly less compute power to run, which means it burns credits at a significantly slower rate.
So his grand solution to participating in the AI revolution is to intentionally lobotomize his digital worker, just so it drains his bank account slower when it inevitably bangs its head against the authorization wall.
That is an incredibly bleak state of affairs.
It perfectly highlights the absurdity of the current user experience. He says he is literally going to wait a few days until his next cycle of monthly credits kicks in, and he will try the YouTube tag experiment again with Minimax 2.5.
He is merely hoping that it will cost him slightly less money to fail at copying and pasting text.
And this brings us to the ultimate darkly comedic conclusion of his entire manifesto.
After spending hundreds of dollars on subscriptions, spending hours uninstalling and reinstalling virtual machines, fighting with WhatsApp API keys, and listening to his AI repeatedly harass a receptionist on the phone,
What did he actually get for his money? What is the tangible product he received?
he concludes that the only thing he successfully purchased was a profound lesson in stoicism. He bought a master class in managing his own tilt.
He paid $800 a year to test the absolute limits of his own patience.
Precisely. He paid a premium to be exposed to absolute systemic madness, and his only real return on investment was the opportunity to practice emotional regulation.
He got to practice not throwing his computer mouse against the drywall. He expected the artificial intelligence to perform his mundane labor. Instead, the software forced him to do the exhausting internal, emotional labor of dealing with a deeply broken tool.
At what point do we have to acknowledge that the sheer computational cost of running these massive models vastly outweighs the economic value of the mundane cognitive labor they are trying to replace?
Seriously, if it cost a massive data center $10 worth of electricity, cooling, and GPU processing power to figure out why it can't rename a desktop file.
And a human can do it for free in 2 seconds.
What are we actually building? Are we just constructing incredibly complex, highly carbon-intensive machines to perform tasks that never required complex solutions in the first place?
That is the defining question of the current AI bubble. We are basically using massive, highly engineered sledgehammers to swat flies.
And those sledgehammers are powered by burning giant piles of venture capital cash.
There is a profound structural mismatch between the sophisticated architecture of the AI models and the low-value reality of the administrative tasks we are desperately trying to offload onto them. Right, until the cost of compute power drops by multiple orders of magnitude.
Or until the agents become reliable enough to genuinely replace high-value, complex human labor.
The economics simply do not work.
It is exactly like Webvan building those massive automated warehouses years before the average consumer wanted to buy groceries on the internet. It is an incredibly expensive infrastructure desperately searching for a viable, profitable use case.
So let's bring this deep dive to a close. We started with a passionate manifesto from a stoic trader who firmly believes we are in the grip of peak market euphoria.
And we've walked through all his evidence. We explored the undeniable, transformative promise of the AI narrative, the dream of the autonomous digital worker, and the total end of administrative friction.
And we contrasted that dream heavily against The highly unprofitable, deeply frustrating reality of actually trying to use the technology today.
We've seen an AI that charges you a premium to literally think about its own failures.
An AI that burns through credits banging against locked API doors.
And an economic ecosystem that relies on incinerating hundreds of millions of dollars a month just to keep the illusion of progress alive.
The author perfectly encapsulates the experience by quoting the Stoic philosopher Marcus Aurelius. You are not disturbed by events, but by your judgment of them.
The event itself is just a piece of software failing to open a browser. It's neutral.
Right. The disturbance, the tilt comes from the hype, the expectation, and the judgment that this software was supposed to be a magical solution to our daily burnout.
When you strip away the marketing videos, the executives making wild promises, and the illusion of 1,000 times productivity, you are left with a very raw, very flawed early-stage technology.
And leaves me with one final, slightly provocative thought to end on today.
What's that?
We are rushing headlong as a society to build a world where digital workers handle all of our mundane tasks, right? All the little frictions of daily life.
Yeah, that's the ultimate goal everyone is chasing.
We desperately want an AI to read our emails, schedule our calls, and fill out our metadata tags. But as we have seen so clearly today, these highly complex, extremely opaque systems will inevitably break down.
They always do.
And when they do break down, fixing them requires immense patience, deep technical troubleshooting, and significant emotional regulation.
It requires a stoic mindset just to manage the tools that were supposed to make our lives easier in the first place.
Exactly. So if we successfully outsource all of our minor daily annoyances to machines, what happens to our human resilience?
Are we outsourcing not just our administrative labor, but our fundamental capacity for patience?
That's the question. Because if we lose the daily muscle memory of dealing with small, annoying frustrations, then the day the AI's API key inevitably snaps, we won't just be inconvenienced.
We will be completely unequipped to handle the reality of the friction.
We will be left sitting at our desks, staring at a frozen computer screen, gripping our mouse, with absolutely nothing left to do but throw it against the wall.
Welcome to the debate. So, I want you to imagine you are in the market for a luxury autonomous vehicle. You go down to the dealership, you pay $800 up front, and the salesman hands you the keys.
Okay.
He promises you this car is going to make you, 1,000 times more productive. So you walk out to the lot, you pull the door handle, and it's completely locked.
Right.
But here is the real catch. Every single time you pull that handle to try and open the door, the dealership charges you $10.
Wow.
You are standing in the lot, your wallet is just rapidly draining, the car hasn't moved an inch, and the marketing brochure in your hand still touts full autonomous capabilities.
It is it's certainly a frustrating image, and undeniably an expensive one, but I think it misses the scope of what is actually being built inside that factory.
Well, today we are looking at the current state of commercial AI agents. Specifically, we're examining whether the market is currently experiencing this unsustainable dot-com-style bubble of peak madness, or if we're just navigating a necessary, albeit incredibly painful, phase of technological iteration.
And we're basing this discussion on a critical analysis of the AI landscape, using the autonomous AI assistant GenSpark AI as a prime case study. The material outlines a pretty massive gap between the technological promises being sold to consumers and, well, the actual capabilities of these systems right now.
The gap is vast. I mean, nobody looking at the data can deny that. So to set up my position clearly, I will be arguing that the current AI agent market is a classic bubble, largely defined by marketing that is just entirely detached from reality.
Right.
Companies are selling the illusion of full agentic capabilities while delivering spectacularly expensive product failures. It is peak euphoria, and consumers are essentially footing the bill for beta tests.
And I take a very different view of this landscape. I will argue that while current iterations are deeply flawed and financially punishing, I won't deny that. This extreme cash burn and the high failure rate we're seeing, they aren't merely an illusion. Rather, this is the messy, fundamentally necessary foundational phase of building systems meant to literally replace human cognitive labor. The friction is a byproduct of a paradigm shift.
Let me start by outlining the stark disconnect between the narrative and the reality. GenSpark AI markets its agent,
specifically their Clawflow super agent, as a fully autonomous digital worker.
Yeah.
It is pitched to run in its own cloud environment, execute multi-step workflows, join your meetings, manage your inbox. The ambition is framed as a no-code operating system. But the reality detailed in the source material is jarring.
It's rough, yes.
Users are paying between $420 and $800 annually just for access. And on top of that subscription, you pay $19 to $40 a month for computational credits.
Right, the credit model.
And those credits can burn out in less than 2 days simply on failed setup attempts. The market is ruled by hype, selling the impossible while delivering what amounts to an exercise in extreme frustration.
Look, I don't disagree that the friction for the end user is immense right now, but I push back strongly against the idea that this friction makes it an illusion or a scam. GenSpark's ambition to be an operating system for replacing human cognitive labor it's structurally profound.
Profound, maybe, but
While relying on the source material's comparison to the dot-com era, we really have to remember the function of that era. Yes, there were spectacular, highly publicized failures, but those failures actively paved the way for the modern internet. The massive capital burn in AI today, whether it's GenSpark's $435 million funding or the estimated $300 to $450 million monthly burn for video generators like Sora.
which is a staggering amount of money to set on fire.
It is! But it is the literal cost of attempting to transition from chatbots that merely answer questions to agents that take autonomous action. It is a vital evolutionary step, not a predatory trap.
Evolution implies some level of forward momentum, though. Let's examine the actual execution, what the material calls the illusion of the digital employee. We have marketing campaigns promising you can go skiing while the AI publishes all your research, yet the agent cannot even cross the basic entrance gate of an application.
You're talking about the browser example.
Exactly. The source material highlights a highly specific example with the GenSpark Claw agent. A user wanted the agent to copy 27 tags from the Helium browser and paste them into YouTube Studio on the Microsoft Edge browser to publish a video. Basic data entry.
Right.
The agent managed to trigger a pop-up request to access the Helium browser, but it completely failed to generate the pop-up to access Microsoft Edge. It couldn't even enter the building to start the work. And worse, it got stuck in a continuous loop trying to do so.
You are touching on a fundamental architectural difference here, though. You are comparing this agent to standard deterministic software. If you write a Python script to copy and paste tags, it operates on strict instructions, it uses a specific API, it executes a rigid command, and it's done.
Which works.
It works, but it's instruction-based. GenSpark and the whole agentic field really is trying to build something intent-based. Think of it this way. Standard software is a train on a track. It can only go where the rails have been perfectly laid out in advance.
Okay.
Intent-based AI is an off-road vehicle dropped in the middle of a jumble. It has a destination, but it has to chop its own path through the environment to get there, which is exactly why it keeps hitting trees.
But if it's an off-road vehicle, it is currently crashing into the very first tree it sees before it even leaves the driveway. I mean, the prompt is simply, publish this video with these tags. I understand it is trying to navigate a local desktop, but I look at this like hiring a brilliant foreign worker who doesn't speak the local language.
That's a fair comparison.
They know exactly what their job is. They know they need to publish the video, but they cannot read the street signs, which in this case are the operating system permissions, to get to the office. Why is navigating an operating system so paralyzing for a system that supposedly has vast intelligence?
Because to achieve that goal on a local desktop, the AI isn't just sending clean API calls in the background. It is attempting to visually and functionally interact with the existing software infrastructure, much like a human would.
But without the context a human has.
Exactly. It does not have the underlying code of Microsoft Edge fed into its brain. It has to physically look at the screen using machine vision, identify the pixels that make up the browser icon, infer that it is a button, attempt to click it, and then navigate the operating system's permission protocols. When it fails to get that pop-up for Edge, it's because navigating a dynamic, localized desktop environment, probabilistically guessing where the button is, guessing why the OS blocked it, is an incredibly complex logic problem.
I understand the technical hurdle, but if the intent-based architecture is fundamentally unready to navigate a basic desktop environment, marketing it as a finished flow super agent is where the narrative completely detaches from reality.
Well,
And the architectural challenge absolutely does not excuse the economics of this failure. Let's move from the failure itself to how the system actively punishes the user for the AI's learning process.
you are talking about the credit burn model.
Yes, the punitive credit burn. Every time the agent fails to access that Edge browser, it doesn't just halt and ask the user for help. It tries to quote-unquote think about why it failed. It tries again. And the material notes the user was charged $10 simply for the agent repeatedly failing to access the browser in a loop. Why is the user paying by the second for a system that is functionally spinning its wheels in the mud?
To understand the cost, we have to look at the mechanics of what is actually happening under the hood. When the AI fails, it doesn't just mindlessly hit refresh like a human might. It operates using a context window.
Right.
Every time it takes an action and fails, that failure is appended to its memory for that session. Large language models process data in what we call tokens, chunks of words or data. As the agent loops, its context window grows. It has to reread and process that massive, continually growing block of text to understand its own past attempts.
So it's reading its own error log over and over?
Exactly. Every single time it generates a new thought about how to solve the problem, it is actively burning server compute on its own confusion.
So the more confused it gets, the more computationally heavy the task becomes, and the faster it drains the user's wallet.
Precisely. It's expensive because artificial reasoning is fundamentally expensive. The compute power required to run these models is astronomical. When GenSpark charges credits for thinking, it is a direct reflection of the actual server costs required to run a continuous, dedicated cloud environment.
But that is exactly my point. You are passing the R&D costs of a defective architecture directly onto the consumer under the guise of a premium tool, and the system traps the user in this expenditure.
I wouldn't say traps, it absolutely does. The material points out another instance where the user spent $40 trying to get the agent to publish a YouTube video via API keys, a task the user had done manually 4,800 times with no issue.
Yeah, the API key revocation. The AI finally accomplished it, but the API key was immediately revoked because the system couldn't maintain the connection properly. $40 burned for a single video upload, and there's no turn-off button to stop the bleeding. You have to entirely uninstall and reinstall the software just to clear its memory.
Okay, the lack of a white button is a glaring UX flaw. I will concede that, without hesitation. But the API key revocation is actually a perfect example of what happens when these two eras of technology collide. You are trying to shove a probabilistic agent through a deterministic doorway. Web 2.0 security protocols like API rate limits are designed to aggressively auto-ban erratic looping connection attempts.
Because it looks like malware.
Exactly. To a traditional server that looks exactly like a malicious botnet or a DDoS attack. The friction happens because our current infrastructure is actively hostile to autonomous agents.
But if the infrastructure is hostile and the outcome is a massive failure rate, then the product should be in a closed beta. It shouldn't be sold to the public. And look, if a system struggles this severely in a closed digital environment like a desktop or an API handshake, it is even more catastrophic when we introduce it to the unstructured chaos of human interaction. Which brings me to the real-world action test in the material.
Ah, yes. The appointment scheduling call.
Right. The user instructed a different GenSpark agent to make a phone call to schedule an appointment. Now, they gave the agent an explicit, strict, negative constraint. Do not mention AI. Do not say you are an agent.
Which is a very hard constraint for an LLM.
We all know why they did it. Most people immediately hang up the second they realize they're talking to a robocaller. So what happens? The agent dials the number, the human answers, and the agent immediately says, hello, I'm Leo in artificial intelligence, and I'm calling you on behalf of...
Oh man, yeah.
And the person is confused and says, hello? And the agent repeats the exact same sentence 3 times. The person hangs up. That 20-second failure cost the user $2.
The failure there is painful to listen to. I mean, it really is. But again, there is a technical mechanism driving that failure. Large language models struggle notoriously with negative constraints.
It is the classic pink elephant problem.
Right. Don't think of a pink elephant.
Exactly. If I tell you not to think of it, your brain visualizes one. In an LLM, the attention mechanism assigns weight to the tokens in your prompt. By explicitly telling it do not mention AI, the tokens for mention and AI become highly active in its neural network. It essentially fixates on the very concept you told it to ignore.
I appreciate the mechanism, but from a market perspective, if a commercial product cannot follow a strict, explicit negative constraint in a 20-second interaction, how is this not exactly like the dot-com bubble?
Well,
This is pets.com. This is Webvan. This is company scaling infrastructure, running Super Bowl ads, and raising hundreds of millions of dollars before achieving an ounce of actual viability. The material explicitly cites the analysis of the dot-com era. Narrative replaced reality. The crowd believed this time is different.
I completely concede that the execution of that phone call was abysmal. And frankly, there is a very high likelihood that GenSpark, as a standalone company, will not survive this era in its current form, or it will require a buyout from a giant like Microsoft or Google to sustain its server costs. The fundamentals of their specific business model right now are incredibly weak.
Which sounds like an admission that we are in a bubble.
We are in a bubble, but I fundamentally disagree on the ultimate meaning of that bubble. Look at the framework presented in the source material itself. It quotes a sentiment from the late 90s. The bubble was not a tragedy, it was a purification.
Calling it a purification is awfully generous when users are losing hundreds of dollars to looping error messages.
It is harsh, but think about a company like Global Crossing during the dot-com boom. They used aggressive funding and took on enormous debt to build global fiber optic networks across the ocean floors. They went bankrupt in 2002. It was a total financial disaster for retail investors.
Right.
But those fiber optic cables, they stayed in the ground. They literally became the physical backbone of the internet we use today. The capital was purified into permanent infrastructure. The exact same thing is happening with the GPU clusters and foundational models built right now.
Look, if you're listening to this and you've tried to build a simple Zapier automation recently, you're probably thinking about how brittle, even rigid rules can be. One software update and your whole workflow shatters. So imagine a probabilistic agent trying to navigate that dynamically. The sheer complexity makes it a pipe dream for the near future. And the fact that the cables stay in the ground doesn't help the consumer who bought a service today expecting it to work.
But you cannot deny the raw demand for what they are attempting to build. Even the harshest critic in the source material, the very person who lost all this money and suffered all this frustration, admits they desperately want this technology to work. They state quite clearly they never want to read or reply to a WhatsApp message or an email ever again. The desire to offload cognitive labor is a universal human drive.
Desire doesn't validate the current product, though. Just because I desperately want a teleportation device doesn't mean the startup selling me a cardboard box with a battery attached isn't taking advantage of my optimism.
But we aren't talking about a cardboard box. We are talking about highly sophisticated, albeit currently brittle, reasoning models. The demand is what drives the iteration. The vision presented, 1 man, 10 AI employees, 0 wasted motion, is actual tangible power. The failures of the Claw agent or the phone call are just weak fundamentals masking a long-term tectonic shift. Yes, the market is drunk on potential. Yes, it frequently mistakes potential for achievement. But the ambition to build a continuous, independent digital worker is exactly the kind of radical ambition that eventually changes the world.
That is a compelling vision of the future, but it requires ignoring the harsh reality of the present. And the present consists of a user paying $800 a year for an agent that hallucinates its way through a phone call, repeatedly fails to click a browser icon, and charges you $2 a minute to embarrass you.
It is the cost of admission to the frontier. Early adopters always pay the highest price for the most flawed versions of transformative technology. The Wright brothers' first flyer was incredibly dangerous and barely functioned as a vehicle, but it proved the concept of powered flight.
Let's summarize our positions in light of this discussion. My stance remains that while the desire to eliminate cognitive labor is a genuine,
deeply felt market demand, the current commercial execution is an incredibly expensive illusion. The valuations we are seeing are completely detached from technical reality. Users are essentially paying premium subscriptions for beta software that cannot perform basic logic without trapping them in costly loops. When growth replaces profit and marketing hype entirely eclipses engineering discipline, a severe market cleansing isn't just inevitable, it is absolutely necessary to wipe out the broken architectures.
And my summary is that today's catastrophic credit burns, the auto-banned API keys, the looping desktop pop-ups, these are the harsh tuition fees of an entirely new computing paradigm. I will readily admit that the product is undeniably premature and the hype is vastly inflated. But beneath the marketing, the underlying attempt to build an intent-driven, continuous digital worker is structurally profound. It is a radical ambition that once this bubble bursts and the market purifies its capital into infrastructure, will lay the groundwork for reality where cognitive labor is fundamentally redefined.
Which brings us back to our core question. Looking backward at historical bubbles like the dot-com crash gives us an incredibly sharp lens through which to view the euphoria of new technologies. It strips away the marketing speak and forces us to look at the actual mechanics of what is happening under the hood.
It certainly forces you to ask hard questions about what you are actually paying for. Are you paying for a functional utility, or are you paying to fund a massive global experiment in artificial reasoning?
And that is a question every listener will have to answer for themselves as they evaluate their own software subscriptions and workflow tools. Are you witnessing a temporary, expensive illusion, or are you participating in the painful, messy birth of an automated future?
And perhaps more importantly, how much friction are you willing to tolerate to find out?
Exactly. Next time you find yourself standing in that metaphorical dealership lot looking at a shiny new piece of technology, ask yourself, before you hand over your credit card, are you entirely sure the doors aren't locked?
Welcome. I've done a little intervention where I want to talk about the market and peak madness regarding the AI bubble. You can take a look at that right after this introduction. But first, as always, I want to introduce to you my last two books, the only books I could edit, recommend them to you. Then you can take a look at AI madness. My analogy with the .com bubble, because I think we are facing exactly the same. I try to explain that in detail to you. Maybe you find it interesting. It will be an explanation about GenSpark AI, my experience, why I think we have reached total and 100% madness with AI, why they promise stuff that goes beyond belief, are incapable on delivering on anything. They promise you the moon and beyond and don't deliver on anything. First, let's look at my books, then you can watch my analysis about GenSpark AI and the AI bubble burst. That should be starting right now. It might take a little longer. It should be on its way for technical reasons, not for fundamentals. All that you will hear once I'm through with the introduction. Let's first look at my last two books, because I have written 5 books. We're going to take a look at book number 4 and book number 6, the only 2 I could edit. This is my book number 4. I write all my books in French and translate them into English and German. At least that's what I try to do. Here is Un Samouraï Stoïque. That's the French version of my 4th book. Here you have the English translation of that book. It's called A Stoic Samurai. That's the English translation. And here you have my 5th book. That's the German version. Der Weg des stoischen Daimon. The English translation of that 5th book. The Way of the Stoic Diamond. Here the original language in French. La Voix du Diamond Stoic. I hope you take a look at them if philosophy interested you and you want to help the channel, give some appreciation for my work. You can do a donation. Anything kind would be appreciated. Now I will switch to my analysis of GenSparkAI.com AI bubble, which should be bursting right now. Maybe it takes a bit longer. It will burst. It's 100%. So the bear market should have started. All that I go into more deep during my intervention. I won't talk about technicals. We won't look at any charts. It's still worth talking about some the fundamentals and some sentiment around the market. And what is happening right now? A lot of people will always get scammed with all that kind of stuff, with every bubble. There are people who get scammed on the way up and people who get scammed on the way down. Everybody gets always scammed. Most people will always just lose money. You must remember there are only 700 billionaires on this planet. It's around the same number that we had during antiquity. There were also around 700 billionaires. Then it was around the same during the Middle Ages, 700 billionaires. You have 700 billionaires, they are becoming trillionaires right now. Our system is based on that. In order to make this immense amount of wealth, give all that wealth to a couple of people between the 700 billionaires, only a very tiny percent are really ultra wealthy. Most of them, they are billionaires, they're not that wealthy. Most of the wealth is in the 1% of those 700 billionaires. It's a very tiny fraction. In order to create such immense amount of wealth for such a tiny group of people, you have to make everybody else extremely poor. That's the only way all those people can be so extremely wealthy. 700 people is nothing. That's nothing. What's 700 people? In order to make them extremely wealthy, well, most people must be extremely poor. That's the current state of affairs. Yes, people will lose a lot of money on the way up and a lot of money on the way down. The bear market should already have started. If it did not already start, it will take a little more time. There's nothing I can do about that. But there needs to be some cleansing. You must get back to a pure state. All the madness, all the hype, all the euphoria based on nothing has to disappear. I talk about that in depth during the analysis you're going to see. Maybe you'll find something interesting about it. Welcome. I'm reaching out to you because I want to talk about some fundamentals. Get me straight. I'm not taking any position on fundamentals. I'm a technical analyst. I wouldn't take any position due to fundamentals. I don't think that fundamentals drive the market. What drives the market is hype. We have reached peak euphoria. I want to illustrate it to you by showing an AI agent that I use right now. That is very heavily marketed. The greatest thing ever. The capabilities right now as I speak, as much as I could test it very little because it burns through all your credits and does strictly nothing. In less than 2 days, we'll talk about that in detail. We have reached peak euphoria, just as we did with the .com bubble. Now I'm talking about fundamentals. I'm not showing you any trading charts, any indicators. I would never, ever take a position on fundamentals. Every time you do that, you will lose money, 100% guaranteed. There's no chance you can survive on fundamentals. My technical indicators tell me that a severe correction should happen, that after Easter, the markets did rebound. It is very probable now that my stop losses will get hit once again. There's nothing I can do about that. I have no crystal ball. All I can do is take the best decision at the best moment and hope that the outcome will be good. I will get stop out. Most of the times I will lose money. The times I get it right, I make enough money to pay for all the losses. That's what a trader does. Now, today, I make an exception because I know you're bored and you don't want to look at any charts and you don't want to search for any patterns and understand what is happening. You don't want to do any of that. I talk a language that is more easily understandable, which is fundamentals. Fundamentals are garbage. Still, the market goes through cycles. We reach an euphoria like the .com bubble, then the market crashes really hard. You go from euphoria to depression. It is necessary to go to a bear market because everything must be cleansed. There's so much craziness going on when you reach euphoria. Nobody thinks straight anymore. We have reached that. And I will show you that with that AI agent and my experience with it. All the money it consumes for me and for everybody, in exchange you get nothing. I want to show that by doing that, I'm not doing a hit piece. Now, I'm going to talk about GenSpark AI. You can interpret it as an hit piece. You can interpret it as you like. Do with it whatever you want. I have no control about that. All I can do is do some honest work. and explain to you the stuff to the best of my abilities. That's all I can do. And don't try to scam you. Don't try to sell you the impossible, just as they do. They are selling you the impossible right now. For a heavy price, the chances of them surviving is like 5%. There are 5% chance of surviving. Once the AI bubble explodes, there should be only 1 or 2 or 3 guys who survive. The best GenSpark AI can hope for is that a big guy with big pockets buys them up. That's 5% chance, which means that they have 95% chance of disappearing, just like everybody else. I will go into it. I will show you the agent. I will tell you what I've done. I will show you all the money it burned for absolutely nothing. I will be as transparent as possible with that. I don't actually at all want to do a hit piece on GenSpark AI. That's not the slightest of my intention. If there's one person on earth who is their biggest fan, it's me. I really wish them the best. I hope they succeed. I hope their dream scenario happens, that Microsoft, Google, X, AI, or whoever, Nvidia, that somebody with big pockets buys them up, lets them do what they're interested in doing. I really hope that their agent one day delivers on his promises. That one day he will be capable not of doing anything difficult, but the most basic stuff. The day he can check my WhatsApp messages, for example, give me a briefing on that once a week. If he can do that, just a briefing would be already amazing. The day he can reply would be even better. Every time I tried, it consumed a huge amount of credit. It delivered nothing, except when I used it with an API key. However, the API key is very hard to set up, which will cost a lot of credits. Once you manage to set it up, the link will be broken. You have to set it up again. You won't be linked forever to the API key. I tried it with 2 things. I tried it with WhatsApp. WhatsApp is very hard because they don't like to give any access to anybody. I tried it with Beeper, which is easier to set up with API keys. It's the same. The access will get revoked. You just waste a lot of time setting him up. Once he's set up, maybe 20 minutes, maybe 2 hours, he will work. Maybe 2 days. I don't know. I never had that luxury of having him work for me 2 days. Because if I do that, he would consume all my credits for nothing. Absolutely nothing. Even if there's no heartbeat task. Now, I tested him at the beginning. Straight afterwards, there were new capabilities showing up. There were new updates. If you're really optimistic, in 2 weeks, it's fixed. Maybe in 2 months, maybe in 6 months, maybe in 2 years. Right now, he's doing nothing for you, that agent. I'll show you why. GenSpark AI is the definition of peak madness, peak euphoria. Most people already have skipped and won't listen to anything I say. Just as there was in the .com bubble, peak euphoria, that GenSpark AI is peak euphoria. To illustrate what I'm telling, I'll let you listen to 1 or 2 things that ChatGPT gave me. I just asked him a simple question and he gave me the answers. He will give you an example of peak madness with the .com bubble. And the AI bubble is just as bad, probably even worse than the .com bubble ever was. So there should be a huge bear market coming, and it should already have started. Now I know that the market have rebounded strongly after Easter, and if we can sustain those kind of level and we move higher, well then we move higher. My short position will get stopped out at break even, and I'll have to see how I trade it. There's nothing I can do about that. I have no crystal ball. But for me, we have reached peak euphoria, peak madness. And GenSpark AI is the definition of peak euphoria and peak madness. Just to illustrate it and make a parallel in history with the .com bubble, I'll let you listen to what ChatGPT said. I just asked a basic question on the .com bubble. I'll let you listen to that, and then we keep on talking and we take a look at the agent together. First, let's take a look at peak madness. According to me, we are facing exactly the same thing right now. There's no difference because it's exactly the same crap, the same nonsense. Please take a look and listen to it. The reply of ChatGPT, I will just ask him to read it to us. We can listen to it together.
Titus Adidatis, the .com era was not merely a bubble. It was a fever dream where discipline was abandoned and illusion was crowned as truth. Men stopped valuing substance and began worshipping projection. What followed was not injustice, but correction. Here are 5 sharp examples of peak degeneracy from that era. 1. Pets.com, the emperor with no clothes image. Raised millions, went public, burned cash at absurd speed. Sold pet food online, at a loss with expensive shipping. Spent heavily on marketing, including a Super Bowl ad, before having a viable business. Collapsed within 9 months of its IPO. Lesson: revenue without profit is noise. The crowd celebrated growth while ignoring survival. Webvan, scale before sanity image. Raised over $800 million. Built massive automated warehouses across the US prematurely. Assumed demand would appear simply because infrastructure existed. Burned through capital and filed for bankruptcy in 2001. Scum element. Executives pushed aggressive expansion narratives to justify funding rounds despite obvious unsustainable economics. 3. eToys versus Toys R Us. Market madness. eToys reached a market cap higher than Toys R Us despite minimal revenue. Investors priced future dominance over present reality. eToys eventually went bankrupt. Lesson: the market, when drunk, mistakes potential for achievement. 4. TheGlobe.com, pure speculation frenzy image. IPO surged over 600% in a single day. No sustainable business model. Investors bought simply because it was internet-related. Scum element. Early insiders cashed out massively while retail investors bought the top, driven by hype rather than analysis. 5. Global Crossing, accounting illusions image. Built global fiber networks with enormous debt. Used questionable accounting practices to inflate revenue. Capacity swaps with other telecoms. Filed for bankruptcy in 2002. Scum element. Financial engineering masked weak fundamentals. Numbers were crafted to seduce, not to reveal truth. The pattern you must see across all cases. Narrative replaced reality. Growth replaced profit. Hype replaced discipline. Liquidity hid incompetence. The crowd believed, this time is different. It never is. The Stoic cut Marcus Aurelius would remind you, you are not disturbed by events, but by your judgment of them. The market is the same. It does not deceive. It reveals who is ruled by impulse. When euphoria reigns, weak men chase stories. Strong men demand evidence. The bubble was not a tragedy. It was a purification. Hold this line, Titus Adeodatus. When valuation detaches from reality, collapse is not a risk. It is a certainty waiting for time.
Actually, a very good job at analyzing the dot-com bubble. I think that his conclusion is top to the point. When he talks about this time is different, he says it never is, because it really never is. I liked when he talked about Marcus Aurelius, since I'm a Stoic author. I've written 5 Stoic books. His analysis and the example he showed you were very good. The one we are going to talk about now, GenSpark AI, is just the same. It's a huge scam. At the current state, they sell you a product for an extremely high price. The product is not delivering anything. In 2 weeks, in 2 months or 6 months, it could be all different. I'm the guy who wants them to succeed the most. I'm actually the biggest fan. If you want to live through what a poker player calls tilt. Tilt is the anger, frustration a poker player has to live through. You can do everything right and be losing money over the next 5 years, even if you do everything correctly. It's just the variance who makes it very hard. That will expose you to a lot of tilt, a lot of anger, a lot of frustration. Then please subscribe to GenSpark AI. You will get that to a very high amount. That's the only thing you get in exchange for your money. I'm a Stoic man. I believe that you only can progress. Things can only get better if you have to suffer a lot. If you have to try a lot of stuff, if a lot of fails, I expect 9 times out of 10 to be wrong. I even expect 99 times out of 10 to be wrong. Just get tilt out of it. That's all I will get out of it. I expect that. I expect GenSpark to be an AI failure. I expect them to have only 5% chance of surviving. I expect them to disappear. I still hope that they make it, because nobody more on earth wants an agent that can do some work for you than I do. Nobody on earth. Maybe I'm mistaken. There's certainly somebody else. This is one thing I want them to do. I never again want to read an email. I never again want to reply to an email. The same goes for WhatsApp. I never want to read a WhatsApp message. I don't care who sent the WhatsApp message to me. I do not want to read it. I certainly do not want to reply to any more WhatsApp messages or any other message on any other platform until I die. I want AI to handle that. That might be a little complicated. Just check once a week what messages I have received. Give me a brief. That shouldn't be so complicated. Maybe that agent of GenSpark AI one day will be capable of doing that. Right now, it's not the case, and I will show you why. I'm not just making stuff up. I wasted a lot of money with that. I tried in a lot of ways to do it. Every way failed. The only thing that get close to a solution was the API key. They get revoked. They won't stay alive, or the connection at least to the key won't stay alive. Then you have to set it up again. It will be extremely expensive. When he does something, how much does it cost? For example, one of the things they advertise, he can rename some files. How much for 10 files? How much does it cost? $3 USD? I will not test that because I'm not interested in renaming some file. At least let's try something that goes in the right direction. Just renaming some files, it makes no sense. There are a lot of apps that do that for very cheap. A lot of free apps do it great. There are some paid apps you can use if you want to rename files. Let's say you do that. Let's say by miracle it works. The agent will actually rename the 10 files you ask him to rename. You know what the price would probably be? Best case scenario, $3 USD. He renames some files on your computer. That's the best case scenario. You have 10% chance that that happens. You have 90% chance that the following. A is you just pay $3. He renames your 10 files. $3. You know that there's nobody on earth, not even a billionaire, will start spending that kind of money just to rename some files. Let's say that happens. Then you're lucky. That's the best case scenario. Scenario B is way worse. Scenario B is what probably will happen. He needs, for example, access to a folder for that. And he will try to get access to the folder to that, but he will fail. And when he fails, he tries to find a solution why he fails. He will try it over and over. In the best case for you, it will only cost you $30 to rename 10 files. It won't rename the 10 files. Now you have an idea why I talk about tilt, anger, and frustration. When you live through that non-stop, with everything you try, the only thing you get out of it is a lesson on how to manage tilt, how to not get angry, how to not throw your mouse against a wall or destroy your computer or do anything other stupid. You just get a lesson in how to stay calm, because this is total, absolute madness. I will show you. I'm not making anything up. Since we have talked about the .com bubble, let's talk about the price they sell the agent. Well, here's the price of the agent. At least that's what ChatGPT gave me. It's around correct. I'm not going to look up my billing statements, my credit card. I'm not going to do that. You pay $420 to have access to the agent, the cloud computer. Then there's even a more expensive one. It has a little more RAM. It's a little faster. It makes no difference because none of them will do any work for you. The expensive one is even $800 a year. You must realize it won't work. It will fail on every single task. Here you see it, $800. At least you will pay that amount. That's around what I pay. That was one of the things I want to show you. They sell it quite expensively. Since that's not bad enough, you have to use credits. The second tier is 21,000 credits. That's $40 a month. Now the first tier is just 10,000 credits. It's a little cheaper, $19 a month. You will waste all that money. He won't do anything. There was an update just before I started. Maybe it fixed one or two things. I've used it 2 days. I went through those $40, 21 credits, just to set him up with the API keys I talked about. It failed because it kept on consuming tasks even when he had no heartbeat task open. Even when he was not checking anything, he kept consuming. It ran for less than 2 days. Everything was consumed just for the setup process. Some very basic tasks. The most basic task. First month, I did waste $40 for that. And that's not everything. Then I waste half of that for the next second month. It was also a waste of time and money. In 2, maximum 4 days, he will consume all this. You get nothing in exchange. On top of the $420 you will pay for it. All that can change in 1 or 2 weeks. I expect it to be a little longer, but all that can change. I want to show you that GenSpark AI, 435 millions in founding. They did get a treasury chest of 430 millions. We will think about how much that is and what they can do with it, because it looks like a lot of money right now, but it actually is nothing. In the AI space, that is nothing. I will show you why. Here you see the price of Sora, how much it cost for 1 month. They closed it, Sora, the video production unit. I liked it. It was useful for what I do, for producing videos, but they did close it. Sora consumes between 300 millions to 450 millions every month. It's burning through money like hell. They made with Sora 2.7 millions. That's the amount I've heard. That's what they made. Every month they were spending 300 millions to 450 millions. They did get out of it only 2.5 million. Let's take a look at what they actually promise with the capabilities. ChatGPT, he will talk about it. They promise full agentic capabilities while they cannot deliver on the most basic task. They promise full agentic capabilities. That's peak madness. All that will change. Everything I talk about will be possible in the future. Right now, it is not. They still sell it to you as if it would already exist. I just asked ChatGPT to look at what the agent is supposed to do, how it is marketed. We'll listen to it together.
Titus Adeodatus, strip away the marketing smoke and you see the real shape of the weapon. GenSpark is not trying to be another AI. It is trying to become a digital worker that replaces your effort. Let me carve it cleanly. What GenSpark claims to be. GenSpark presents itself as, open quote, an AI employee that executes tasks, not just answers questions, not a tool, not a chatbot, a worker that obeys objectives, close quote. Core idea, from assistant, agent. Most AIs wait for commands. GenSpark's Flow super agent Claude tries to understand your goal, break it into steps, execute those steps, deliver a finished result. Like a disciplined subordinate. You say, prepare my meetings tomorrow. It does. Reads your calendar, researches attendees, summarizes context, prepares briefing notes. No micromanagement. What their AI employee can actually do: 1. Execute multi-step work, the core promise. You give intent, not instruction. It can research topics deeply, compare sources, multi-model fact-checking, build reports, slides, tables, generate websites or assets, automate workflows across apps. It's designed to plan plus act, deliver. 2. Operate like a real worker across tools. This is where their ambition becomes aggressive. It connects to Gmail, Outlook, Google Drive, Calendar, Slack, Teams, etc. Then reads emails, drafts replies, schedules meetings, prepares documents, manages tasks. It becomes embedded in your daily system. Number 3, make real-world actions, not just digital. This is rare and dangerous territory. It can make phone calls for you, navigate phone menus, speak to humans, return summaries. Example, call a shop, check availability, report back. Number 4, attend meetings instead of you. Their meeting bots are part of the illusion of a real employee. It will join calls automatically, take notes, summarize decisions, send reports afterward. You are replaced in the room. Number 5, automate entire workflows, Flow advanced workflows. This is likely what you refer to as Flow. It allows multi-step automation across apps, conditional logic if X, do Y, repetitive tasks handled automatically. Think, every morning, check emails, summarize, create tasks, notify me. No intervention. 6, create anything, content engine. It can produce slides, reports, data analysis with Python, images, videos, websites, documents and summaries. It compresses hours into minutes. 7, run inside its own cloud computer. This is a key promise most people miss. Your agent lives in a dedicated cloud environment, runs continuously, executes tasks independently. Not session-based, not waiting for you. It works even when you do not. What this actually means, no illusion. GenSpark is trying to become a no-code operating system for replacing human cognitive labor, close quote, not helping you think, thinking and acting instead of you. Concrete use cases, real battlefield applications. You could use it to trading, research, scan markets, build reports, aggregate data, prepare structured insights, content, research topics, generate scripts, build slides or visuals, analyze competitors, outsourcing friction, call services, handle admin, book appointments, knowledge work, summarize books, articles, build structured notes, maintain knowledge systems, full automation, daily routines, email processing, data tracking, reporting pipeline. The hard truth, what they don't say clearly. The promise is immense. But reality today, Slower than a human in many tasks. Expensive, credits burn fast, as you already saw. Not fully reliable in long chains. Requires supervision. It is not yet a soldier you can send blindly into battle. It is a promising recruit. Final judgment. Titus Adeodatus, GenSpark is attempting something radical. Not intelligence augmentation, but labor replacement. If they succeed, the model is simple. 1 man, 10 AI employees, 0 wasted motion. No, that is power. But today, discipline still belongs to you. The machine imitates effort. You embody it.
What you just listened to is total hype. There's nothing the agent can right now do. Nothing. I want to show you also they have, since a long time, called for me AI agent, which has nothing to do with law. It is something separate. I will explain to you why it doesn't work. It's a little better than the agent because the agent does nothing. He does just one thing that he does great, consuming all your credits and taxing you a lot of USDs. That he does. Apart from that, he does nothing in the correct stage. In 2 weeks, as I told you, 2 months or 6 months, it could be completely different. I'm not saying that they cannot improve really fast. If you get nothing out of this intervention, then please get this out. When you see somebody like the guy here on screen, showing up, putting on a smiley face and promising you the moon and beyond, even without a promise, when you have somebody who shows up and sells you a product and puts on a funny hat, be aware that it is 100% a total scam. Nobody on earth would do that. Nobody honest would show up and do stuff like this and never tell you what the price is or that everything you will ask from him will fail. When you say somebody shows up with a hat, tries to sell you a product, that it is peak scamminess, that you have reached peak euphoria, while the agent isn't capable of doing anything in the current state. As I told you, it is not even a beta product. Because even a better product would do far more than that agent is capable right now. There was an update before I started this intervention. Maybe that already fixed 1 or 2 things. I don't know. I haven't tested it. I just have a very small amount of credits left this month. I will try something in around 5, 7, or 8 days. Because in 9 days, I get a new cycle and new credits. Twice he consumed my 20,000 credits that I have every month for absolutely nothing. Everything failed. The only thing that didn't fail was the API key. It got revoked. Even then, when he did something way too expensive to ever use it. It was something very basic. Just filling out a form. Just filling out some questions online. The questions I wanted him to fill out is some questions once everything was already created, just to publish a video. You always have to answer the same questions. I find that extremely boring, extremely time consuming. You don't mind because you have never uploaded any video. I have done it 4,800 times. I don't want to fill out the same questions and answer the same questions every time. Those questions shouldn't even exist to start with. I asked him just to fill out those questions. Once I have done everything, I have created the title of the video, I have edited the video, I have uploaded it. All you had to do is press a couple of questions, which are always the same, and then press publish. Now he did it, but it was extremely expensive. And he only did it through an API key. The API key did get revoked really fast. It was total waste of time, total waste of credits, $40 burned for nothing. That's what he succeeded in doing. It was meaningless, way too expensive. The time setting him up is way longer than the time it would take me to fill it out myself. Then once he's set up, you will have to keep setting him up. Actually, you don't set YouTube up anymore to publish videos, but you will spend the rest of your life setting him up so that he sets up videos. It's not that he will do work for you, it's that you will do work for him. You will pay money and do work for him so that he does something meaningless. That's how it looks nowadays. All that can be different in 1 month, 2 months, or 6 months. All that can be different. I'm talking about my experience. I've tried it twice. He went to more than $40. He went to $40 plus half. He went $60 in deliver nothing. I did get nothing in exchange. The only thing I did get in exchange was tilt management. Learning how to manage the tilt. Not get angry, not destroy my computer, not throw my mouse against the wall. That's the only thing I did get out. A lesson in tilt management. He's not doing any work in any way or form for you. Then you get guys this, promising total agentic capabilities right now. Look it up. He talks about a trip he did, how much he likes going skiing. I pick up my phone and did tell my agent to do some work. When I get home from skiing, he has done all the work for me, published everything, did all the research for me. Absolutely madness. There's nothing in any way or form that agent can deliver right now. At least twice I tested it. Once when it came out, immediately after, I tested it when they did the local desktop version. Not just the cloud environment, the local desktop version. Both were spectacular failures. It is so bad right now, it's not that he tries to do the work. It is that he can't even enter the building so he can start to do the work. The entrance gate, he cannot get through it. There's a gate at the entrance of your property, and he can't even go past that gate. And since he cannot pass that gate, he will use all your credits just to find out a way how to get inside. Once it's inside, everything will still be way too expensive. This is peak madness, peak scamming. When you see somebody putting up a smiley face, promise you full agentic capability, there's nothing, according to you, that the agent cannot do, while in reality, he cannot do anything. Except burning through all your credits really fast, in less than 2 days for absolutely nothing. All that can change. Finally, let's take a look at the call. Claude doesn't make any phone call, the agent we are talking about. There's a thing with GenSpark AI that makes phone calls since quite some time. I've tested it recently with one phone call. I want to show you that. Here you see an AI agent. It has nothing to do with Claude, the agent we are talking about. It's from GenSpark. It has nothing to do with Claude. I asked him to do a phone call. I gave him precise instruction on what to do during the phone call. Of course, it might be a spoiler. You will be surprised, but he didn't follow the instruction. That's not surprising. At least he did the phone call. Here's what happened. I told him very precisely, don't talk about AI. Don't talk about an agent. Because if you call somebody nowadays and you start talking about that, the guy will hang up. Most people have never touched AI, have no idea what it is. They will not interact with it. If there's an agent calling them and saying in the first sentence that he's an agent, it will fail. Because of that, it will fail. Here's what he did. He called that person. I gave him clear instruction. It was for an appointment. Normally, he should do that. That is scammy stuff you will find on the internet. Him doing phone calls for you. He called the person. Don't talk about AI. Don't say that you're an agent. Just schedule the meeting. That's all. Make the appointment for me. Here's what he did. He called. He said, hello, I'm Leo, an artificial intelligence. And I'm calling you on the behalf of... And then he said my name. When he said that, the other person said, hello? Then he said it one more time. Hello, I'm Leo, an artificial intelligence. I'm calling you on behalf of... And then he wanted to say my name. Now he tried that 3 times. And 3 times the guy just found it strange. He said, hello, hello, hello. Then he hung up. It was 20 seconds. It cost me 100% is 40, 10% is 4 USD, and half that is 2 USD. It did cost 2 USD. All he tried to say is 1 sentence, and he didn't even manage to say that 1 sentence. When an agent calls a human, he must act like a human and talk like a human. A human makes small sentences, says only 1 or 2 words. Are you there? Then the other person answers yes. Next Friday, is that okay? Then next Friday is okay. Not a huge sentence, a huge explanation about AI. If you start that kind of talk, it will fail because everybody will hang up. Most people don't want to understand what it is. They have never heard anything about an agent, and they will just hang up. He tried 3 times to say the first sentence. Hello, I'm Leo, an artificial intelligence. I'm calling you on the behalf of, and then he wanted to say my name. 3 times he said that. It cost me 2 USD, and I didn't get the appointment. It's total failure, and I told him not to talk about AI or agents. I just told him to take the appointment for me. That's all. And then you have to use very small sentences and only say yes or no most of the time, like 90%. Because that's the only way a phone call will go. You cannot make a long sentence and explain difficult stuff over a phone call to a person who has never heard anything about AI. And I told him not to do that, but that's what he did. He can make a phone call for 20 seconds, costs 2 USD. If he talks 10 times that, then you have 20 USD. That was just 20 seconds. It could be much longer. One phone call can easily be 20 USD. Just one phone call. Now, there's a 90% chance the guy will hang up. More than 90%. It's a gimmick. It's a gadget. Nobody can use that because it will cost a lot of money and it will fail spectacularly 9 times out of 10. That's not as bad as GenSpark Claw. GenSpark Claw is way worse than that because he can't even try to do anything. He at least entered the building. Once he was there, everything was too expensive, he failed. GenSpark Claw won't be even capable of entering the building. He won't even pass the gate right now. Still, you will waste all his money by him trying to pass the gate, getting to the entrance door. This is GenSpark Claw Local, though that's new. At the beginning, there was only the virtual machine. The idea is that you can easily use it for local stuff, for files on your computer. He should have more access to that. It should be easier. He should be able to interact with applications. However, you have to grant him access. And that's what he fails on. You cannot even grant him access. Once you have granted access on the settings, here's the settings. I'm not going to press that because if I press it, you will see my email and I don't want to edit that out. There's an option where you can add apps where he has access, stuff that he doesn't have access. Most of the time, he only gets access for one task. Every time you have to grant him access. And here's the issue. He will fail. For the first task, here's the task I gave him. It was a task where he had to use the Edge browser, where there was one of my projects that I wanted him to publish. I wanted him to go to the Helium browser and copy the 27 tags I've created and then put it into the Edge browser, YouTube Studio, and publish it. He managed somehow to give me a pop-up for the Helium browser. Yes, he did get authorization to look for the Helium browser, but I never received the pop-up for the Edge browser. I have tried to tell him to give me that pop-up again, grant access a couple of times. All failures, every failure did cost me more credits than the one before. You see, task, request access to Microsoft Edge. This, like all the rest, failed. He charged me 10 USD for trying to access. The first time it wasn't that expensive. Second time more expensive. Third time more expensive. Because every time he tries to do the same thing and he didn't succeed until now, he does some more thinking. The more thinking will consume more credits. The good thing is that down here you can choose actually the model. I was a long time on the most expensive one. Now I was capable of going down to the 2.5 one. That's a very light model. That's a less expensive model. I was able to do that in the past. It only said down here, Minimax 2.5. Now it also says up here, Minimax 2.5. It could be already way cheaper. I'm not going to waste any more credits on this right now because I have very little left. Maybe in 8 days or 5 days before I reach the end of this month of credits, before I get some new credits, I will try again. Here's the thing. There's a way of turning that off just with the virtual machine. The only thing you can do is delete it. Here's the issue. Because he already tried access Microsoft Edge, he remembers everything he did until now. He doesn't start fresh. Maybe the pop-up didn't show up because he messed up. He went to the wrong virtual desktop or the pop-up showed up somewhere on a different monitor. I didn't see it. Somehow he messed up. One pop-up showed up, the other one doesn't show up. But he will always remember all the madness that has happened until now, all the failures. And he will keep on working on this and consuming even more credits than he consumed until now because he realized that everything he tried failed. He does a lot of more thinking and he tries again. And that will be extremely expensive. How can I wipe him clean? Just so that he forgets all that. What do I have to do? There's no way to turning him off. There's a way of wiping it clean. What will I have to do in order to get a chance to see that pop up? I will have to uninstall it. That takes a long time. You have to go through the install process. The install process is very long. It stops at 80-90%, then it waits like 3 or 5 minutes, and you think it failed, it didn't work, and then suddenly it is installed. It's a long process. Then you have to link your account again. That's really annoying. Here, just with the virtual machine, there's no turn off. There's a way of simply granting access. Only the agent can grant access. When he fails, which he will, just as here, it will consume a huge amount of credits when he fails. There's no turn off, there's no grant access. There's a button. It's true, they have now integrated a button where once you have created the access, once the agent was capable of giving access to an app, you can revoke that access. The access are limited to one task, actually. I'm not sure about that. It's all 100% a mess. You get nothing out of it. Nothing. Tidy my mess? Well, you can forget about that. Way too expensive. Fill it for me. I tried. The only thing that works is API keys, but they get revoked. Granting him access to fill anything will fail and will cost a spectacular amount of money. See and extract screenshots. So maybe he can do some screenshots. I don't know how spectacular he will fail. Well, app to app, that's a kind of copy paste. Fill it for me. Well, that I tried. I wanted him to fill out the same stuff on YouTube all the time. Once I have done all the work, he just clicks on publish, pressing a couple of buttons. Not even that he could fill out was a failure. See and extract. Well, maybe he can take some screenshots. I wouldn't bet too much on it. Maybe that works. I haven't tested. Batch it. What does it batch? Batch edit photos, update Slack channel, rename files by content. Well, all that will be extremely expensive. If he does anything of that, you have to grant him access and probably the access will fail. Browse, collect. Can he do some research? Maybe. There are very good tools from ChatGPT. Deep research. Those tools won't cost you a fortune. They won't fail all the time. Compare flight prices. Really use the most expensive agent for that when you can just have a normal conversation with ChatGPT for this. Build and analyze. Data analysis. Most of these capabilities will be spectacular failures. He won't even enter the building. If it is not a spectacular failure, a very expensive spectacular failure, then it would still be way too expensive to make it in any way or form useful. Again, I can now select Minimax 2.5. It says Minimax 2.5 here. 5 or 8 days, I can test it again with the last credits I have left this month. Maybe then he does something. Nobody on earth wants more an agent to do some work for me than I do. I would be very happy he could just check once a week my WhatsApp messages, give me a small brief on it. If he could already do that, I would be more than happy. Right now, everything was a spectacular failure. What about GenSpark AI support team? Well, the support team, they are overwhelmed and they promise you stuff they won't deliver. And they barely get what you talk about. Barely. Because they themselves don't know how to use the agent. They have never used it. Nobody probably has ever used the agent. I don't see how anybody can use that agent. They promised me to give me some credits back. They didn't deliver on the promise. Most of my emails they didn't answer. The email they gave me was a standard copy-paste answer. They promised some credit backs that you will never receive. I don't expect them to send me some bad credit backs. If they send me some credit backs, it will be something meaningless like 2 USD. Why I have spent hundreds of USD. And every time I interact with him, I get charged 10 USD. But maybe they give me like 2 USD back. The next time I type something in this box, there's a good chance I will get charged 10 USD again because he fails and he tries to find a solution. In the past, I didn't have Minimax. Now that I have Minimax, maybe it's cheaper. At the end of the month, I'll try again. I really wish them the best. I really wish they will survive. I really wish their dream scenario that somebody with deep pockets buys them and then they can do whatever they want. I hope that tomorrow I have a future where I have an agent starting doing work for me. But selling you this and promising you the moon and beyond while he does nothing is peak madness. It's peak euphoria. Everything is built on hype. Nothing is built on something true that really works. It was the same with the .com bubble. It's the same nowadays. Everything 100% is built on hype. Not everything doesn't exist. AI does exist. I use AI all the time, all day long. AI helped me create 4,800 videos. That's what I have on my channel. AI did a lot. I do a lot of research with it. I interact with it all day long. Not that agent. Never that agent. Every time you speak to him, he will charge you 10 USD. That's madness. He will fail. That's what you must understand. If at least you get something for you, 10 USDs you spent with him, then maybe it makes some sense. The rest, it's total scumminess. It's exactly the same as the stuff we looked at with the .com bubble. Can that be fixed? Yes, it will be fixed. If they don't fix it, somebody else fixes it. If you cannot grant access to application. You have to be able to grant access to an application. If you cannot do that, then there's something really wrong. If that consumes all your credit, that's really wrong. If you cannot wipe him clean, start fresh over, so he doesn't make the same mistake again, there's something really wrong. If you cannot turn him off because there's a turn off button, the only thing you can do is uninstall it and reinstall it, there's something really wrong. Why would somebody buy up GenSpark AI? This is garbage. This is not even a better product. Why would somebody buy something where there's not even a grant access button? Just as I revoke access to an application, why can there not be the same thing for granting access in a cheap way? Once it's granted, then the AI can work with it. Let at least the AI do some meaningful work. Don't fail spectacularly before even starting the work. That's the issue. If there's anything good there, which I doubt, it's just as the stuff we saw with the dot-com bubble. The food delivery, all the other crap. Food delivery where they pay money to deliver food because it doesn't work. Nobody anyway buys the food online for the cat online. Even the food delivery stuff, I'm sure that even there, at least somebody did get some food. Here, you get nothing. You get credit consumption. That's all you get. It gets more scammy over time because before that call for me, at least he did a call. Here, he won't even do anything because he won't even get access to it. If you cannot turn it off, because they don't want to put a turn off button, if you cannot grant access, if API keys, once they are established, get revoked nearly instantly or a couple of hours later, you have to start over again, and it's really expensive. What do you want to do with it? Rename some files? I'm sure he fails on that also. If he doesn't fail, it's at least 3 years of renaming 10 files. To me, current state of scamminess at the highest point imaginable. That's what it is. Peak euphoria, peak madness, nothing you can do with it. I'm their biggest fan. I really hope that this is the future. I would wish nothing more that in 2 weeks or 2 months, he is capable of doing something for me. I would wish nothing more than that. I'm really their biggest fan. I never want to read one single email or reply to one single email. The same for WhatsApp. I don't use Twitter. If there will be a day I will use Twitter, I certainly don't want to read any Twitter post ever. And I also don't want to post anything myself on Twitter. Nobody wants more an agent than I do. Right now, it's just a way of burning money and getting nothing in exchange. I hope you find that it's interesting. I'll send a link to GenSpark AI so they can take a look. But I think there are so little people working for them that they anyways will never be able to read their email. And even if they do, they're incompetent. Nobody knows what I'm talking about. Nobody will be able to give any reply that makes any sense there. Not the guy with the funny hat. Nobody is capable of doing that. This is just peak euphoria, peak madness. Here's the good thing. If you want to get a lesson in how to manage tilt, not get angry, not get mad, and not get frustrated, and if you want to see how fun it is to waste all your credits, all your money on something that will not deliver anything for you at the current stage. Now there was an update. Maybe that's fixed already a little. If you want to be exposed to a lot of tilt, then download this and try it. I'm sure it will be a lot of fun, a huge experience for you. All that, I wouldn't be mad about it. I'm not mad about it. I like trying new technologies. I learn stuff from it. I like being an early adopter. But I'm wasting a lot of money and I get nothing in exchange. Nothing. This is not even a better product. That on its own wouldn't upset me at all. What upsets me is that they sell it like it's the next great thing. The guy with the funny hat that I show you, he, for example, says you will be 1,000 times more productive. Are you kidding me? You will be less productive, way less productive if you touch this than if you never touch this. Because you will waste a huge amount of time setting it up. You will waste a huge amount of money. You will get nothing in return. It's not making you more productive. It makes you 1,000 times less productive in the current state. But they put on the funny hat and promise you the moon and beyond. Full agentic capabilities. There's nothing, according to them, the agent cannot do. While in reality, he cannot deliver on the most basic tasks. I hope that all that changes in 2 weeks, in 2 months. I hope that already the thing that I can select now minimax down here and minimax up here. Before I could put it down here, but it didn't show up here. Since that's the case, maybe that already helps a lot. I don't know. I only have a very tiny amount of credits left this month. I will burn through them just as I burned for the last $80 of credits and get nothing in exchange, but I'm not doing it today. I'm not doing it today because I just tested it yesterday and was a spectacular failure. I want to give it some time and try again. And I think it's really painful that I have to uninstall it and reinstall it just to start on clean. Just so that maybe this time I get the pop-up message for the Edge browser that you cannot wipe it clean on your own other than by deleting the virtual machine or the local one. The one you see here is the local one. The virtual machine is the same thing. It's just more expensive, very more difficult to give him access to anything, to the virtual machine, than it is when it is local. That's the current state of AI. And yes, it's total hype. It's total madness. They promise you the moon and beyond. They are not capable of delivering anything. I understand. If you only make 450 millions and running SOA for videos costs 450 millions every month, what's that money? What are you going to do with that money? They tried the best they could with their little financial capabilities. I just don't like it when you put up a funny hat, then you promise the moon and beyond, and you cannot deliver on anything. That's peak euphoria, peak madness. It's exactly the same as we saw with the dot-com bubble. All that should be wiped out, wiped clean. There should be a very severe bear market. It should already have started. Once those players are all bankrupt, don't exist anymore, somebody then will one day deliver on all those promises. That's what should happen. If anybody listened to this, thank you for listening. I hope you find something interesting in it. I'll see you in my next intervention.